And Airbus scores the first big win at the Dubai Air Show with a mega order for 255 new jets. We'll speak to CEO Guillaume Fauré this hour.
Well, it's less than 20 seconds to go until the markets open. Let's take a look at your futures. And it is indicated downwards, not a huge move, but we're looking at a Euro Stoxx 50 futures session, which is down, for example, about 0.1%, despite positive data coming out of Asia. That wasn't enough to set the mood and open up these equity markets higher. So, Tom, how is that starting to format as we get these markets opening up?
Danny, the FTSE 100 is opening flat as things stand. You were talking about the data out of Asia. We had that better than expected economic data out of China, but a big GDP miss for Japan, and the different reactions there. So the Nikkei coming in very strongly. There's an expectation there'll be more stimulus there. In China, it's a question of whether or not this slightly better than expected data is actually going to keep the PBOC on the sidelines. The FTSE 100 is now trading down 0.3%. The Spanish IBEX is also lower by 0.8. Christine Lagarde from the ECB will be giving testimony to the European Parliament later this week. That will be, of course, in focus around any comments regarding the trajectory in that all-important December meeting for the ECB. The CAC 40 is flat. We can move it on to the cross-asset board and see how things are playing out after a very volatile week, of course, in terms of the bond markets. The futures in the US are flat after a solid day on Friday. You're getting 1.2 in terms of your US 5-year. The 10-year German Bund at minus 0.286. Again, the ECB and anything from Christine Lagarde later this week will be in focus when you're looking at the German Bund. The pound was slightly stronger in the earlier part of the session, currently flat. GBP 134 is what you're looking at with sterling. Danny.
Tom, just waiting for the IMAP on the floor to load at the minute. We don't have it quite yet to see the sector break down, but we do have weaker oil today, so that could certainly translate into some of that sector pain there. It is remarkable, again, to see it coming off of all-time highs on this equity market, Tom, that we're not able to sustain there. So there's clearly a lot of nerves in this market as we continue to see the gyration. So here's your look at IMAP. Healthcare selling off, financials selling off. A steeper yield curve perhaps not in the cards to help that financial sector out. Information technology, one of the only sectors to move higher into the green there. But elsewhere, it really is this market where you're getting these higher beta sectors starting to sell off. Materials, of course, being one of them as we continue to see iron ore fall, Tom.
Yeah, a big interview for us coming up, the CEO of Airbus, and they have sealed that deal. As we said in the headlines, 255 aircraft, $30 billion is the value attached to that. Gaining at 2% on the back of that news is Airbus. BMW denying reports that it's looking at the luxury premium car, supercar that is based down in Woking. McLaren, of course, they're denying that report. Audi, though, of Volkswagen, saying that maybe they're interested in that Bahrain sovereign wealth fund owned, a majority-owned company. In terms of CMC markets, Sky News coming out reports that maybe they're looking at splitting up and separating the business into the non-leverage and the leverage. They've come out and saying that the board will consider that in a cautious way, and they're going to have a decision by June of 2022. So currently unchanged on the back of that news. Okay, let's get the Bloomberg Business Flash with Laura Wright. Laura.
Thanks, Tom. Boeing says it's optimistic about resuming Chinese orders and deliveries for its 737 MAX after the country's regulator signaled that it is close to clearing the jet to fly. Speaking to Bloomberg, the jet maker's head of commercial aeroplanes says he's looking forward to having the MAX back.
We're hopeful that we can do that soon. We've seen some orders on freighters that have come through, and we're just encouraged.
We'll bring you interviews with leaders from Boeing, Airbus, and some of the world's biggest airlines throughout the day here on Bloomberg Television. All 10 companies making their debut on Beijing's first ever stock exchange have rallied on their initial day of trading. An auto parts maker was the standout performer, jumping 511% in early trading on the Beijing Stock Exchange. The new bourse is intended for small and medium-sized enterprises that have long faced difficulty raising capital in China. Tesla CEO Elon Musk has been sparring with Bernie Sanders on Twitter after the US Senator repeated his call for the ultra-rich to pay more tax. Musk raised the notion of selling more of his Tesla shares, which would require him to pay taxes on the gains. Sanders had earlier tweeted that we must demand that the extremely wealthy pay their fair share. That's the Bloomberg Business Flash. Tom, Danny.
Laura, thanks so much. Laura, right in London there. Now let's get into the markets, and joining us now is our Bloomberg M Live editor, Eddie Vanderwall. Eddie, so coming in this morning, we had more positive data from China, and obviously the Chinese growth picture was one that had been a concern to markets. But it comes in stronger than we had expected, and yet markets aren't reacting. What is really the dominant force then that's dragging these markets down a little bit weaker so far in this European session?
You know, China has been a canary in the coal mine all along. China has really been on the forefront of the outbreak of the virus, and then on the forefront of all of the slowdowns that we've seen. Now, the problem is that, you know, a lot of the problems are spread to the rest of the world already, right? We're looking at inflation above expectations, most places. So really, I think the story is no longer about China. Yes, it's good to see a turnaround in China, but I don't think a China turnaround alone is enough to bring the world economy back on track.
So what is the focus? Where is that key catalyst then for markets going forward? We had that debate again being squarely outlined in terms of inflation with Kashkari, the Dove, of course, and Summers on the other end of the spectrum when it comes to inflation over the weekend. Is that the key driver for markets?
Tom, I think you've absolutely nailed it. I think it's policymakers. I think policymakers, and we get a lot of them this week, particularly from the Fed. We get a lot of hawks speaking. But again, as you point out, I think it's the doves at this moment, because we want to see, you know, whether the doves are capitulating. And we got Williams this week, which I think on Thursday, and I think that is the absolutely key moment when if Williams comes out and capitulates and sounds a little bit more hawkish at this point, then I think that is what the markets would be looking out for.
If we do get that, if inflation continues to run hot, will it finally be victory for the gold bugs?
You know, the gold bugs are definitely have the spring back in their step. We've seen gold rally over the last few days. We're sitting at about $1,850 per ounce for gold. But really, what's been interesting to me is that gold has followed real rates and not the dollar. We've seen the dollar strengthen. We've seen real rates fall. And what you usually expect is gold to follow the dollar. But this time around, gold's gone with real rates, which I think is really interesting because, you know, that just shows us how much this story is about inflation expectations.
And of course, tying into inflation, the input prices, and we saw aluminium and iron ore coming off a little bit on the back of that China data. When it comes to oil, softer as well, still speculation that Biden might resort to the strategic reserves. We don't know, he's keeping us guessing. Is there anything else within the commodities complex that you're looking at?
You know, the commodities complex has been a driver in all of this. Again, a little bit like the China story, commodities were among the first to show that there's supply chain problems, and that which fed through to the rest of the, of the whole of the inflation story. But right now, I think it's becoming a little bit more about wage inflation. It's no longer so much about the commodities. So, you know, commodities coming off at this point, it's interesting, but I don't think alone that would be enough to convince me that inflation's gone away and has been defeated.
Yeah, and of course, everyone pointing to that wage picture, adjusted for inflation, still deeply negative. Eddie, always bringing up the most important points. Wonderful to have you on with us this morning. That is Eddie Vanderwall, of course, from our M Live team. Now, coming up, Airbus announces a mega order for 255 narrow-body jets. We're going to be speaking with the company's CEO next. This is Bloomberg.
stress is there at the moment amongst the asset managers that actually some of the ESG labeled products, then if you probe, are not green?
Well, look, there is some stress, and it's great that there's that scrutiny, and there's that skepticism or healthy skepticism about ESG labels or sustainable labels. And that, again, is one of the reasons we're having this ruthless, relentless focus on net zero, because in the end, look, we can't stabilize the climate unless we get to net zero. And it's a simple, these are hard numbers. Your emissions are either A or B, they're going up or down. And if they're going down, are they going down consistent with the science? We anchor it in the science, the same science the UN and others use for the 1.5 degree objectives.
Should this not be compulsory? Should we not have regulators coming in and saying, look, this is a new definition, you stick by it, and we're going to measure it?
So I think it's a great question. So let's look at what happened with TCFD, climate disclosure. 6 years ago, you and I were in Paris. We talked about this. We talked about other things. Now that's moving to become mandatory.
You talk about hiring aggressively at the moment. Can you walk me through how challenging that is at the moment? How difficult is it to find the right people?
Well, things have changed. Again, the world has changed under the pandemic, and you all know worldwide, you know, what the challenges with getting people back into the workforce.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back to the Open. We're a little more than 10 minutes into your European trading day, searching for direction. On a headline index basis, we are basically unchanged, slightly weaker on these markets. It's really financials dragging us lower, but you can see some outperformance, for example, from the Cacaron up 0.1%. Consumer goods, the best performing sector. So Tom, that likely helping us out today.
Yeah, big week for the aviation sector as well. Key figures from the world of aviation have been gathering in Dubai for the first global air show, the first one since the pandemic began, and the event kicked off with some good news for Airbus, announcing a mega order for 255 narrow-body jets. Bloomberg Markets anchor Guy Johnson is alongside us here in London in the studio with a top interview. Guy.
Thanks, Tom. Key figures in Dubai. I feel like I'm missing out now that I'm not there.
You usually are.
I feel
Guy Johnson-shaped hole.
Exactly. Let's try and fill that hole right now with a fantastic guest, as you say. Guillaume Faury is the CEO of Airbus. He joins us from the Dubai Air Show. Guillaume, thank you very much indeed for your time. You've kicked off the show with a huge narrow-body order being led by Wizz. You're there in person at an air show, which is fantastic. I feel bad that I'm not there with you. What does it tell us about the state of the recovery that we are finally seeing?
Hello, good morning, Guy. Happy to be with you and happy to be here in Dubai, the first show after the COVID-19. So we are on the recovery, and this is what this order is just telling us, is confirming that airlines start to look at the horizon. And we see the traffic rates going up. It's still a COVID-19 situation. We are not back to where we were in 2019, but I think we start to see the light at the end of the tunnel.
We've just seen the reopening of the North Atlantic. Are we going to see, Guillaume, the transition from this being a narrow-body recovery, which speaks to the order we've just been talking about, the Wizz order, to a wide-body recovery? When do we start to see big numbers for the bigger planes?
That's a very important question, and thank you for asking. We see the recovery as well on wide bodies and very long-distance flights, international flights, but not to the same extent. We continue to believe it will take more time to have the long-haul flights back to what it was in 2019. So we see the full recovery between 23 to 25, and it's going to be earlier for single-aisle business than for wide-body business. When exactly, we don't know. We think Asia will probably also take more time to fully reopen. So there's still a lot of work to be done.
Guillaume, let's talk a little bit about the freighter market. The freighter market has kept many airlines going during this crisis. I was talking to Shai Weiss about this other day from Virgin Atlantic. He certainly sees a big story going forward for freight. You do clearly as well. You've got the new 350F, the freighter. When are we going to start seeing big orders for that? Are we going to see a big order for that at the show? What are we thinking about the structural change in the market as a result of what freight is doing right now?
The freighter is a segment of commercial aviation that is not very big in terms of number of planes, but has played a huge role, has been a very big help in the pandemic for many operators. And we see a shift in the way goods are transported around the world. There's a lot of value that is carried by air, not necessarily the heavy goods, but the ones that have a high value and don't like to stay in inventories or being carried around the world. And we believe the cargo market will continue to expand. But there's also a structural change just ahead of us. There's a lot of old planes that need to be retired. Operators want to replace them by more fuel efficient and carbon neutral planes. And we see also the ICAO has put in place a regulation that will make those older planes not being able to be delivered 2028 onwards. So that's the moment where we come with A350 freighter. That's a great platform for a cargo plane. It's going to enter into service in 25, and we'll see orders coming soon. At the show, after the show, we'll see. But obviously, we are in discussions for orders on that plane.
Guillaume, you unveiled on the eve of the show a very optimistic view of the world going forward in terms of demand for aircraft. What was your takeaway from COP26? I'm trying to tie these two things together because you sound optimistic, and I'm wondering how much of that is coming from what we've just seen at COP, airlines being forced effectively to fly more efficient aircraft. Is what we've just seen in Glasgow going to accelerate that process? What was your takeaway from what we saw in Glasgow?
Yeah, at Airbus, we are fully convinced that we need to decarbonize our industry, that there's no other way, and that the sooner we do it, the better, because each and every ton of carbon that goes into the air contributes to global warming. So we've really taken the bull by the horns, as I say, and we see that what has happened in Glasgow with the COP really just goes in the same direction. We need to be fast. Time is of essence. And in our industry, we want really to take the leadership on the decarbonization agenda. So that's where we are. I see Glasgow as a very important milestone. A lot of commitments have been made, but from commitments to facts, that's where the industry has to contribute. And at Airbus, again, we really want to be strong contributors to the decarbonization of our industry.
Guillaume, you've been on the front foot in China, given the travails of the 737 MAX over at Boeing. What do you make of the developments around COMAC, the C919? It's been a long time in development, but they do have some provisional orders at the moment. How much challenging will that make the market in China?
Well, on the short term, I don't see a significant change. The size of the market is such in China that COMAC will only take a small share of it in the best case. Would they be successful with the entry into service of their planes? We think they will be successful on the long term, and we factor in a growing COMAC presence in the market. But again, on the short term, China still needs Airbus. We are delivering to China. In 2020, in the pandemic, sort of 20% of our planes delivered around the world went to China, and the Chinese airlines, they remain very strong partners. So we continue to work with them, and we think this will keep going.
Okay, the geopolitics is back in focus today. We have a meeting, a summit between Presidents Xi and Biden. Do you expect that possibly to lead to a recovery for Boeing in that market?
I don't know, and I will be listening very carefully to the outcomes of these discussions.
Let's just switch gear and talk about what is happening in the supply chain, Guillaume. You've talked in the past about the problems that you're having within the supply chain. Are those starting to ease? Is there any sign that we are starting to see some of these bottlenecks work their way through?
Actually, we are dealing with the issues one by one. I said earlier last month that I don't see systemic issues in our industry for the supply chain, but there are a lot of root causes. And I think the main reason why our suppliers are having problems is on top of the raw material issues and the logistical issues around the world and the difficulty to find people. Well, we are on the rise again. After 15 months of hibernation, we are growing again. And it takes a bit of time and a lot of efforts, and that's what we are managing with our suppliers. We believe the ramp-up rates we have communicated will be achieved, and we are very committed to it, and our suppliers are very committed to it as well. So again, solving problems one by one.
Okay, Guillaume, just briefly, where specifically are these supply chains most acute at this moment in time, and where are you seeing some relief?
Yeah, so again, it's not systemic. These are issues that are specific to each and every supplier, because a workshop has been closed for 15 months and it takes more time than what the supplier was anticipated to put it on again, because they have more difficulties to find people on the market, and they need to take young people that need to be trained, and it takes a bit more time than planned, because some have issues with the logistics. Carrying goods around the world is very expensive, so they're probably playing a bit more with a yellow line in terms of timing, and then parts are arriving a bit late, and we need to deal with it. So it's a lot of small issues that at the end have to be managed. That's why it takes time, a lot of energy, but I remain optimistic for the ramp-up. So that's really the message I want to convey.
Guillaume, thank you very much indeed for your time today. We really appreciate you joining us from the Dubai Air Show. I hope the show continues to go as well as it has done thus far. Guillaume Faury, the CEO of Airbus. Tom, back to you. Thank you for the hospitality.
Thank you for coming on set. We're going to be speaking to Boeing, of course, a VP there in a little over 10 minutes as well, so stay tuned for that one. Guy will be back on set for that interview. Coming up, the talks have ended, the delegates have departed, and a deal was clinched, but there are growing concerns that COP26 failed in its ambitions to get the world on the path to net zero emissions. We have more from Glasgow next. This is Bloomberg.
You finally got your taste of MIT, so why did you decide to leave MIT and come in and run the SEC?
One, when a president asks you to do something, it's really hard to say no. But it's also just an incredible privilege and an honor to serve.
Will we get to herd immunity? Or let me ask it a different way. Have we given up on herd immunity as a practical matter?
You will know when you get to that point, when the cases are so low, they're barely detectable. That's what herd immunity means. We don't know what that percentage is, David.
Welcome back to the Open. We're more than 20 minutes into your European cash equity trading session, and we are pausing here around all-time highs. You're looking at an index headline basis. The Europe Stock 600 slightly weaker, but it really is a mix once you look under the surface. France able to outperform, though it is starting to weaken since after the opening. We have earnings, that picture starting to trail off as we really concentrate on these gyrations in the bond market. And what that means for equities, are they sending them a signal that they need to start soon heating? Now, of course, another factor in these markets and really conversation we've been having over the past 2 weeks is COP26. And it's been those 2 weeks of negotiations, after which we've had negotiators from almost 200 countries clinching a deal over the weekend that aims to reduce the use of coal and boost climate targets sooner. It also broke the impasse around carbon markets, setting the framework for a globally recognized system. Well, let's get over to Glasgow with our reporter who's on the ground, Maria Tadeo, who's been following this conference for the past 2 weeks. So, Maria, we have this deal announcement over the weekend. What is the significance of it?
Well, you know, Danny, for starters, we do have a deal, and that by itself is significant. At one point on Saturday, remember, this COP26 went into extra time by 1 extra day. The Chinese were prepared to open up the entire text, so we do have a deal. In terms of the actual content, there's 3 things that really stand out to me. One is it does keep the 1.5 degrees Celsius temperature check alive. That was key for the UK delegation. We also have the start of what could be a global ETS system that is for carbon trading. And then, of course, we have that line, that phase down of coal and other inefficient fossil fuel subsidies that features prominently and very explicitly in the deal. It is worth noting, however, that this was a watered down version of the original line, which called for a phase out. That would have been much stronger language, but a lot of the delegates that I spoke to after the deal was agreed said, when you look at phase down, phase out, that is semantics, it's technicalities, but the clear sense of direction is now very clear. Coal does not have a future. The coal economy is done, and that is the message that should be taken away from this conference.
The criticism about a lack of ambition, Maria, is that down to this last-minute demand by the combination of China and India on that precise question of coal, or do the developed nations around financing also have a role to play here?
Yeah, and you know, it would be very easy to pin this all down to India. It is true that it was the Indian delegation who on Saturday, by surprise, said we want to change the language and include that phase down. But it's not just India. You could also argue the Chinese played ball on this, and to some extent the United States too, and the EU. They agreed to that final text. When you look at the payments that you allude to from the rich countries to the poorer, perhaps more vulnerable countries, that is also in the spotlight. A lot of these countries said the richer nations of the world have to pay for the decades they've polluted, and it really is that simple. And of course, whether or not this was sufficient enough, it does depend on who you ask. For a lot of the activists that have been here for 2 weeks camping out, what they do say is that, of course, this is on paper, the implementation will be key, and this is a fight for people in real life. It's not just about government.
Right, is it too much? Blah, blah, blah. Maria, thank you so much. That's Maria Tadeo in Glasgow for us. Now, coming up, we're going to be talking about Boeing seeking to convert some of its passenger jets for cargo use. This is Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to The Open. We're 30 minutes into your European trading day. Here are your top stories. Good cop, bad cop. World leaders seal a breakthrough climate deal after some major compromises. Austria puts unvaccinated people under lockdown as the latest wave of coronavirus in Europe sparks alarm. And more top interviews from the Dubai Air Show. We'll talk supply chain challenges and aviation demand with Boeing Global Services CEO Ted Colbert. Tom, we're looking at European markets stalling around all-time highs. Usually positive China stories can get us off to a good start today. Not so right now.
Yeah, it was a beat on the economic data front from China, but maybe it's because there's now question marks as to whether or not that in fact gives the PBOC and policymakers there more excuse to kind of stay on the sidelines and not inject more liquidity into that economy if it's looking a little bit healthier than some had assumed. The Europe stock sits under the benchmark there is flat. We'll break it down into sectors shortly. The DAX is also unchanged. You're seeing a bit of gains in terms of 10 points on the CAC 40. The FTSE 100 is flat as well. You have Christine Lagarde giving testimony, so we'll be looking to hear anything she says ahead of that all-important December meeting for the ECB. We can switch it on to look at how things are playing on a sector-by-sector basis. It's worth pointing out that the Morgan Stanley team, the equities team there, are saying that as you look to 2022, reduce your exposure to US equities and increase them to European and Japanese equities because of where we are in the cycle. That is the call from Morgan Stanley. Let's break it down and have a look at how things are playing out sector by sector then. The last time I looked, it was energy that was at top, gaining 0.5%, but very modest. You also have travel and leisure technology also gaining about 0.3%. At the bottom of the list on a sector-by-sector basis, basic resources, iron ore is lower today. Also banks down by 0.5%. That is the shape of play 30 minutes into the trading session. Let's get the Bloomberg Business Flash now with Laura Wright. Laura.
Thanks, Tom. Heineken has agreed to buy South African wine and spirits maker Distell Group for 2.2 billion euros. The takeover creates a new regional group to compete with larger rival AB InBev and sports giant Diageo, as well as its signature lager. Distell makes Savannah cider and a number of wines for exports. All 10 companies making their debut on Beijing's first ever stock exchange have rallied on their initial day of trading, and auto parts maker was the standout performer, jumping 511% in early trading on the Beijing Stock Exchange. The new bourse is intended for small and medium-sized enterprises that have long faced difficulty raising capital in China. American Tower Corporation is said to be in talks to buy CoreSite Realty, a data center real estate investment trust. According to Bloomberg sources, the companies could announce an all-cash deal soon, valuing CoreSite at roughly $10 billion. The potential deal comes amid steady consolidation among REITs that manage data centers, which provide critical infrastructure for cloud computing. Tesla CEO Elon Musk has been sparring with Bernie Sanders on Twitter after the US senator repeated his call for the ultra-rich to pay more tax. Musk raised the notion of selling more of his Tesla shares, which would require him to pay taxes on the gains. Sanders had earlier tweeted that we must demand the extremely wealthy pay their fair share. That's the Bloomberg Business Flash. Tom, Danny.
Okay, Laura, thank you very much indeed. Let's get back then to the aviation story. And Boeing may partner with specialists to convert its passenger jets for cargo use to keep up with soaring demand for those planes. Air freight has been a rare bright spot for global aviation as online purchases and shipping rates rise. Bloomberg Markets anchor Guy Johnson back on set with us after that Airbus CEO interview, of course. And we have another top interview, Guy.
Yeah, well, let's talk about the supply chain story. Let's talk about those freighter conversions, because you say, Tom, huge demand for freight. As we see freight rates remaining super high, it's kind of trickled down from aviation into the shipping story around the world. Let's talk more about that now. The guy that deals with this over at Boeing is Ted Colbert. He is the Boeing head of global services. He's the CEO there. Ted, thanks for your time today. Really appreciate you joining us from the Dubai Air Show. Tom, just talking about the strong demand we're seeing for freighters right now. A lot of airlines converting older aircraft into freighters. Just how strong is that demand right now? And is it a blip? Is this something that's going to go away post-pandemic, or do you think this is here to stay?
So thank you again for having us. It's good to be here and a pleasure to bring you all the news from the Dubai Air Show. Look, this market is booming right now, and as we all know, it is booming because during this pandemic, we had a significant, unprecedented increase in e-commerce traffic around the world. That traffic increase has driven demand for our products, in particular, our freighters and converted freighters. We see that staying strong for a significant period of time. We released our commercial market outlook recently, and in that outlook, we have a forecast and prediction that post-pandemic, we'll see a 70% increase in freighter demand versus pre-pandemic numbers. And so that is driven by the e-commerce market. It's also driven by the mix of a freighter fleet that will continue to evolve. The future freighter market will be a cleaner market, a cleaner fleet, which we're all very encouraged by, and we believe it to continue.
Well, let's just pick up on that point about the cleaner fleet. When does that switchover happen? At the moment, older, dirtier aircraft, less efficient aircraft, are being converted into freighters. You're pushing new freighters, Airbus is pushing new freighters. When do we see the mix switching from conversions to new aircraft, and that being the focus? We've just wrapped up the COP summit in Glasgow. Certainly the evidence is that the aviation industry is going to have to do significantly more and quicker.
Yeah, absolutely. And as you would have heard from our team there, our Chief Sustainability Officer, Chris Raymond, spent a lot of time talking about our commitment to sustainability and having a cleaner aerospace industry. We are focused on innovation and technology to support that, sustainable aviation fuel. That will begin. We've been flying with SAF for a while, and you'll start to see that being incorporated in the next decade or so. So there's time ahead of us to get there, but the work is being done now to make sure that we deliver safe and sustainable products to the market.
Ted, you talked about that cleaner fuel. We know that Airbus is putting money to play to develop hydrogen. Is there a risk that Boeing is a little behind the curve on this? Is there more that you need to do to catch up with developments around the potential for hydrogen?
We stay close to Airbus and the industry in general. I saw you had Guillaume on before. We all believe that working through the opportunity to make aerospace cleaner is a team sport. And so we're all working on very similar strategies and technologies. And we've done work in testing in the hydrogen space. We're spending a lot of time on SAF, and we're working on other opportunities and technologies. So I wouldn't say that we're behind. I think that we're all working hard and fast to meet our objectives and meet the commitments that we've all made together.
Okay, Ted, I don't want to take you too far out of your comfort zone, but we have had reporting from Reuters that the CAAC, the regulators in China, are looking pretty favorably at giving the green light to the 737 MAX. We have this meeting between Biden and Xi later today, this summit. Can you give us an update on where things stand on approvals for that aircraft in China?
Hey, look, as you can imagine, we are working both with our own government and the Chinese government to continue to make progress on the 737 MAX. It is important that we stay connected to them. As you described, we are moving in the right direction. No specific updates at this time other than what you know, which is continued talks going in the right direction and encouraged feedback.
Ted, you're Boeing's supply chain guy. You obviously have had a very busy few months as we see bottlenecks emerging around the world. What is your sense of where we are in this process? Are the physical bottlenecks starting to ease? Where are you seeing current bottlenecks sort of showing up? What is your view on how this is going to evolve?
I think it's going to be pretty dynamic, to be honest with you. We'll see improvement in some areas and continued challenges in others. We see in some cases in our operations up in the Pacific Northwest, challenges getting product or pieces of assemblies from the shipping space to the factory. Small challenges there, things that are not putting at risk, obviously, our commitments to our customers, but requiring us to be very adaptive in a really challenging time right now. We believe that we'll start to see some improvement over time. It's hard to predict how quickly that will happen, but know that us and others in the supply chain are working hard to relieve some of the constraints that are there today.
Ted, final question. The other sort of supply issue that the aviation industry is experiencing right now is bringing labor back, bringing pilots back, yes, bringing cabin crew back. What can you do to help those carriers that are struggling right now? Can you offer extra simulator time, getting pilots back in seats? What can you do to help? Because we're hearing from airline after airline that this is one of their key challenges right now.
It's a great question, and in Boeing Global Services, this is one of our sweet spots. We offer simulators and simulation software. The demand for our simulators and utilization of simulators has gone up tremendously, and we work with all of our customers around the world to make sure that those solutions are high availability and in the right place at the right time. In addition to that, we have digital solutions like crew scheduling that make sure that we are helping all of our customers minimize disruption to their customers by having crew in the right place at the right time, even when there are challenges with the numbers of crew available. So there's a lot of great technology to support the recovery, and we continue to stay close to our customers to support them in those efforts.
Ted, really appreciate your time today. Thanks for joining us from the Dubai Air Show. Ted Colbert, Boeing's Global Services CEO. Tom, it's interesting. You talked to Faury, you talked to Ted. The supply chain story feels like it's getting better, but still pretty opaque right now. Yeah. No obvious end in sight.
No clear end in sight. And then the interest around the question of labor shortages, as you said, and then the numbers of pilots. And of course, even the pilots that are still on the payroll have to go through retraining to get up to speed. That's a challenge, of course, for the carriers. But yeah, the likes of Airbus and Boeing, with those thousands and thousands of components coming in every single day and having to manage that, clearly a key test point in terms of supply chains. Guy Johnson, thank you very much indeed with those two important interviews. We'll continue, of course, to keep across the Dubai Air Show, which continues this week. Danny.
Yeah, really fascinating conversation. Of course, inflation, a very important feature of these conversations and markets today, with Janet Yellen saying that squashing COVID is the key to lowering inflation. We've, of course, seen rising consumer prices, damaged by its poll numbers. We're going to discuss that. We're going to discuss inflation up next. This is Bloomberg.
the common ground on energy that you share now with the Prime Minister of the United Kingdom?
We are both very committed to the transition to a net zero future, and as part of that, to building up the renewable energy capacity for Scotland and the UK. Scotland has got massive potential in wind energy in particular, onshore and offshore, but also some real potential in new and emerging technologies, carbon capture and storage, for example. There's also, I think, an understanding, and perhaps the UK government and I don't entirely agree on the detail of this, but we must accelerate the move away from fossil fuels. We've got to do that carefully in a way that protects the people who are currently employed in that sector, in Scotland around 100,000 jobs, and do it in a way that doesn't see us importing more oil and gas, but instead moving to the alternatives.
People are talking about Bloomberg surveillance.
There's some guy out on Twitter who says I look like I'm 101.
I noticed that.
Do you think I need a lift? Is it time
What
that
did he say about me? What did that particular gentleman say about? Let's have a look. One of them is near 101 years of age.
Which one would that be?
The other has an ego in the orbit of Mars. Who's that?
I had no idea.
Mrs. Lisa, the only chance to productive conversation. It's a fairly accurate summary of this show, isn't it, Tom?
The eyes, or should I do the whole thing?
The pandemic has been calling the shots for the economy and for inflation. And if we want to get inflation down, I think continuing to make progress against the pandemic is the most important thing we can do.
The challenge is these high prices that families are paying, those are real, and people are experiencing that pain right now. We need to pay very close attention to this. We need to take it very seriously. But my view is we also need to not overreact to some of these temporary factors, even though the pain is real.
That was Treasury Secretary Janet Yellen and Minneapolis Fed President Neil Kashkari weighing in on how to ease U.S. inflation. Well, let's bring it a little bit closer to home and talk Europe. Joining us now is Ben Ritchie from asset manager Aberdeen. So, Ben, you write in one of your more recent research reports, it's been a very strong 18 months from European equities, but you would be a little more circumspect from here. What risks are you seeing that lay ahead for this European market that's trading at all-time highs?
Well, thanks very much for having me, Dan. It's actually great to be in the studio for the first time in a couple of years. I think there are a number of things that are building up. None of them that you'd pick out as being major concerns, but which are just starting to put a little bit of drag on corporate performance. So we could look to the weakness in China. I think we can look at the annualization of difficult numbers. You know, we're coming from very, very high levels of annual growth, which is starting to wane a little bit. And at the same time, on margins, you've got cost and supply chain, as we've heard from many guests, that are putting pressure on margins as well. So I think none of those things on their own are major issues, but I think they're all putting a little bit of brake on corporate earnings performance, which has been, incredibly strong over the last 18 months.
Ben, it's interesting, you didn't mention COVID, and we saw some record levels across the continent in the last few days. I know you've been traveling in Europe. I was in Brussels on Friday. There is activity, but there is now increasing concern with the Austrians, for example, restricting the unvaccinated. Is that a potential headwind, or can we look through that at this stage?
Well, I think what we saw in the early part of this year was that even within some of those lockdowns, you were able to continue to see pretty high levels of economic growth and expansion. And I think when you look at what's happening, it's quite targeted against specific areas, particularly the levels of unvaccinated people, which are a small overall cohort of the population. So I think it has the potential to be a small drag on growth, but I don't think it's something that's going to be a major setback for the economy overall.
So when you're evaluating some of these risks, and as you put it, each on their own might not necessarily be concerning, but altogether they are, where are the areas that you seek out? You also write, it's a stock picker's market, as many stock pickers hope continually will come back. What stocks are you picking now?
Well, I think it's all really about earnings growth. I think that's my view on the market at the moment, that while there's a lot of focus on inflation and interest rates, ultimately I think what investors are looking for going into 2022 is companies that they think can deliver. They've been spoiled over the last 18 months. So we've had earnings growth this year of 50%. That's a super normal year. We haven't had a year like that probably since the early 1990s, maybe the early 2000s. So it's been an incredible year. As we move into next year, when you look at earnings growth, people are looking for perhaps 5 to 10% for European equities. So we're coming into a much more narrow range. The expectations around whether defensives or cyclicals deliver, again, those have narrowed quite a lot. So actually it's going to be looking for the companies that can really deliver those good levels of earnings growth and actually meet and beat expectations that I think is going to be really key. And that could come from across the spectrum. So I think you're going to find opportunities, whether it's in banks, technology, pharmaceuticals. I think you're just going to need to pick the right ones. And if you get the wrong ones, I don't think it matters that the company is trading on 10p cheaper than one of its competitors. It's still not going to perform very well.
So that's where, banks and energy, are those sectors examples where you can find attractive valuations with that continued support from earnings? And if so, how are you picking within those sectors? What is driving your allocation within those sectors?
Well, I think when we look across the board, I think investors are having to choose a little bit at the moment between earnings risk and valuation risk. I mean, that very much seems to be the dynamic to me. You're having to pay up a little bit more for that certainty on visibility. Equally, you're probably not taking so much earnings risk with banks and energy, but on the other hand, multiple risk, but you are taking perhaps maybe a little bit more earnings risk as we look out. There's a bit more uncertainty around that. So I think investors are going to have to choose their poison, earnings risk or valuation risk. If you can find segments of the market which maybe are cheap but also have a bit higher visibility, that's great. But there just aren't that many of those opportunities around. And perhaps, yes, in energy and banks, expectations are still fairly modest. Valuations are fairly modest. There could be the opportunity within that to find some of those companies that could still deliver at fairly cheap multiples.
Ben, great catching up with you today, helping us pick our poison, as always. That's Ben Ritchie of Aberdeen, head of European equities. And Ben's going to be continuing the conversation on Bloomberg Radio, so don't miss that. Now, coming up, Austria puts 2 million unvaccinated people under lockdown as it tries to stop the spread of COVID. We're going to have that story for you next. This is Bloomberg.
His top spot as Asia's busiest airport in 2020 when passenger traffic slumped 88% from 2019. The lack of a domestic market and strict COVID rules have made for a slow recovery, and walking through the airport, the majority of F&B outlets and shops do remain closed. Here in the departure hall, long stretches still remain boarded up in areas where you would typically see throngs of passengers waiting to board their flights to destinations across the world. Only 2 lounges do remain open to travelers, one operated by the Plaza Premium Group and the other by Cathay Pacific, down from the 12 that are usually open here at the airport.
Unfortunately, when COVID had hit, we had closed a lot of our lounges and airport hospitality services. We're cautiously optimistic with the growth.
COVID certainly has forced a rethink of strategy to be nimble in the face of policy uncertainty during the pandemic era.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Welcome back to the Open. We're a little less than an hour into your European cash equity trading. We're looking at equities that are struggling for direction. They have turned mostly into the green, but it's still not huge gains. We are hovering around all-time highs. So valuation squarely on the mind of many investors. We were just talking to Ben Ritchie from Aberdeen, who's laying out some of the risks in these markets. There are many, and altogether, he says, does pose a threat. But earnings, of course, have really been the power of growth in these markets. Well, let's get to the Bloomberg First Word News with Laura Wright. Good morning, Laura.
Good morning, Danny. Negotiators from almost 200 countries finally agreed a deal over the weekend that seeks to keep the most ambitious goal of the Paris Climate Agreement alive. After 2 weeks of talks at COP26 in Glasgow, delegates agreed to reduce the use of coal, end inefficient fossil fuel subsidies, and boost their climate targets sooner. The accord came despite last-minute objections on coal use from China and India. China's economy performed better than expected in October as retail sales climbed and energy shortages eased, partly offsetting a slump in property. Industrial output rose 3.5% in October from a year earlier, while retail sales growth accelerated to 4.9%, beating economists' forecasts. Japan's economy, meanwhile, shrank by an annualized 3% in the last quarter, much faster than forecast by most economists, ramping up expectations for more stimulus. GDP has now contracted in 5 of the past 8 quarters. Presidents Joe Biden and Xi Jinping are set to hold a virtual summit later today. The talks come amid heightened tensions over issues such as Taiwan and trade. Biden and Xi have spoken on the phone twice this year, but this is the first time the conversation is being billed as a summit. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Danny, Tom.
Laura, thank you. Now, Austria is putting unvaccinated people under lockdown starting today for at least 10 days in a dramatic move to stem the spread of the virus. New infections spread to almost 2 million people in Europe last week, the most since the pandemic started. Joining us now is Bloomberg's Jonathan Tyrone. Jonathan, how then will this lockdown work in practice?
Well, police checks are in force on the streets right now. There have been thousands of people, according to local media reports, stopped by the police, checked, asked for their vaccination passport. If they don't have one and they're caught trying to go into a cinema, fitness studio, retail shop, they're subject to €500 fines, and the proprietor of the shop or place of business would be subject to $3,600 fines, or euro fines.
So in terms of rising cases we've seen in Europe, specifically in Central Europe, Jonathan, what is behind those? What is driving the higher case counts?
Well, the fourth wave follows the third and the second wave, in so much as it gets colder, people are driven indoors. And frankly, in Central Europe, Austria in particular, we have a fairly low vaccination rate, so only about 2/3 of the population is vaccinated. That means that more cases are transmitted. The intensive care stations in the hospitals are filling up almost exclusively with unvaccinated people. And so, basically what we're seeing here in Austria and across this part of Europe is a growing frustration with the segment of the population that isn't being vaccinated.
Okay, Bloomberg's Jonathan Tyrone on the virus cases in Europe and that dramatic step by the authorities in Austria. Checking in on the markets, you've had a slightly bit of a modest turnaround in terms of the European benchmark. Gains now of about 0.1%, very much still at these record levels, looking for additional catalysts. In terms of a sector-by-sector basis, energy at the top of the list, basic resources at the bottom. That is it for the European market open. Surveillance is up next. This is Bloomberg.
Engine number one was able to do on the Exxon fight, it opened a lot of people's eyes to, I guess, the power that smaller investors can have. And I'm curious as to how other people can sort of look at what you did and use that as either a template or maybe just some sort of guide as to how they can sort of approach their relationships with other companies.
We founded the company in Engine Number One on the idea that we take the data, not ratings and rankings of ESG of the past, but we actually take the environmental, the climate, the social, worker data, and we simply use it to look at the valuation of companies and look at it over a long period of time. And so if you think about it that way, you own these companies. Everybody that owns the company, whether you're a big institutional investor or you're a small retail investor, you own the company. You have a voice, you have a vote every year.
Yeah.
And so our approach is, is to use the vote and engage with these companies over time.
But that's always been the case. I mean, at least in theory.
I was just finishing what you were saying, Tom.
Thank
November
you.
3rd is when the decision is. Just in case people got confused, I will. Just one more story, Tom.
Yeah, thank God for that.
We're at 137 right now.
Wrap it
It's a weakness. Is this where they play the music and the Academy Awards? Is this it? Do I thank my mum again? Are you in charge of this?
Is she the only one?
Kill the music. You know who's in charge here.
We see human capital as one of the constraints. We've been working deeply with our supply chain.
I don't think if the oil prices continue to go up, what I know that there is a gap between supply and demand.
There's still a long way to go before we can say we've dealt with climate change.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Here's what's coming up on today's program. Good cop, bad cop. World leaders seal a breakthrough climate deal after some major compromises on coal. COVID strikes Europe again. Austria sends the unvaccinated into lockdown as the Netherlands puts partial restrictions on the whole country. And Airbus scores the first big win at the Dubai Air Show with a mega order for 255 new jets. Well, let's check in on the markets. An hour into your cash equity trading here in Europe, and we are hanging tight, just up about 0.1% on the Europe Stock 600. We are hovering around all-time highs. New risks coming into the fore constantly. Inflation is a concern, but a very strong earnings season. How long can that last? How long can that propel stocks as we worry about things like consumer confidence? We're looking at a 10-year yield that is moving lower today, nearly about 2 basis points. This, of course, after this global rethink on the bond markets last week after a red-hot CPI reading. We're about 154.43 on your 10-year. Really has been the 5-year yield that's been doing the bulk of the moving, the bulk of the concern of the front end as a curve continues to flatten. Our markets now perhaps starting to price in a policy mistake coming from the Fed as they contemplate inflation. Also looking at a slightly weaker dollar this morning, coming off of about a 1-year high for the Bloomberg dollar spot. So here's your look at European markets. To get here, you go map markets go on your terminal, and you can see a lot of the dreaded gray box. This means basically when markets are unchanged. So the DAX more or less unchanged. We're also looking into IBEX that's more or less unchanged as well. A stronger outperformance from the CAC around that's up about 0.2%. We do have some of those material companies underperforming today, considering we've seen the price of iron ore, for example, start to stall. Still, despite the fact it has a lot of oil majors in it, we're looking at a UK benchmark that's up about 0.2%. Well, let's go ahead now and check in on 3 of our top stories this morning. We have our reporter in Vienna, Jonathan Tyrone, who's covering Europe's 4th wave of COVID-19. Maria today was in Glasgow after the overtime conclusion of COP26, and Yusuf Gamaluddin is in Abu Dhabi for ADIPEC. Let's start then with Maria. So Maria, coming to COP, we have this agreement over the weekend. Is it enough?
Well, you know, Danny, the question or the answer to that question is we'll have to wait and see. Now, on paper, you do have what looks like a breakthrough on coal, you know, to call on all the countries that participate in this COP to phase down the use of coal, but also the inefficient fossil fuels subsidies. That, you could argue, is a breakthrough, but nonetheless a watered-down breakthrough. You also have a pledge to keep that 1.5 degrees Celsius temperature check, but a lot of this really, Danny, will depend on the implementation, where you go from the theory, the paper, to the reality, especially when you look at the transition payments, and we'll have to go from the richer countries to the poorer, more vulnerable ones. So it's a very complex question to put in a simple answer, but I would say it will be about timing and implementation, and that will give you perhaps a much better sense of judgment as to whether this was a good COP or a bad COP.
Maria, thank you so much. All of your hard work over the past 2 weeks keeping track of COP26. Let's get over to Jonathan now. Stick with the Europe story. So Jonathan, from Austria to Netherlands, is this going to be the norm in Europe, seeing more lockdowns? Where do we stand?
Well, the Austrian government is trying not to lock down the entire population, so therefore focusing on the unvaccinated. We have a pretty low vaccination rate of about 2/3 of the population. The intensive care units are filling up almost exclusively with those people who have rejected the vaccine. So the strategy of the federal government is to put restrictions on the unvaccinated people, try to get more people to get the shot, and impose pretty stiff fines for individuals and companies that are caught flaunting the rules. Police are out in the streets checking the status of people's vaccine passports. If you're vaccinated, you can still go to cultural events, gyms, retail shops. If you're not vaccinated, you can only go out when you are going to work, going to school, going shopping for food or medical treatment, basically. So that's the status, and I expect, people are already warning there will be economic repercussions. Trade groups are talking about 350 million euros a week in damages. And certainly will have political consequences as a minority, but a very loud minority of anti-vaxxers are out there.
Okay. All right, Jonathan, thanks. Now let's get over to Yusuf. And Yusuf, you spoke with any CEO, and of course, the topic of $100, triple dollars on a barrel of oil came up. Does it look like we're going to reach $100 a barrel?
Not really, Danny. Not at the moment, at least. If we do, it's not going to last very long, is what the NE CEO told me earlier here in Abu Dhabi at the ADIPEC conference. It is, on the one hand, all about what's going to happen with supply and demand. We also caught up briefly with the Minister of Energy for the United Arab Emirates, and on the topic of OPEC Plus and whether they're going to do more, because the U.S. has been saying, hey, OPEC Plus, put more barrels into this market. He said, look, there's no reason to panic. There's plenty of oil out there as far as OPEC Plus is concerned, and they need to be patient. They're going to stick with their 400,000 barrel a day regimen for the moment. This is political hot potato, as you know, over the weekend. Again, the calls becoming ever clearer for the U.S. president to do something, maybe withdraw some of the inventories from the strategic petroleum reserves. Whether it's going to make a difference in terms of price, people here in Abu Dhabi don't appear to be quite convinced on that front. The other thing that's going to be important to watch out for is to see what we get off the back of COP26 in terms of delivering more energy with less emissions. So think along the lines of technology and, of course, innovation. Danny?
Yusuf, thanks so much. And thanks to Jonathan Tyrone in Vienna, Maria Tadeo in Glasgow, and of course there, Yusuf Kamaluddin in Abu Dhabi. Now let's get to the Bloomberg First Word News. Here's Leanne Gerrans. Good morning, Leanne.
Good morning, Danny. Presidents Joe Biden and Xi Jinping are set to hold a virtual summit later today. The talks come amid heightened tensions over issues such as Taiwan and trade. Biden and Xi have spoken on the phone twice this year, but this is the first time the conversation is being billed as a summit. Now, China's economy performed better than expected in October's retail sales climbed and energy shortages eased, partly offsetting a slump in property. Industrial output rose 3.5% in October from a year earlier, while retail sales growth accelerated to 4.9%, beating economists' forecast. Japan's economy, meanwhile, shrunk by an annualized 3% in the last quarter, much faster than forecast by most economists. ramping up expectations for even more stimulus. GDP has now contracted in 5 of the past 8 quarters. And 3 men have been arrested under the Terrorism Act in Liverpool in northwest England after a car explosion at a hospital killed 1 person and injured another. Police say they are keeping an open mind as to what did cause the blast. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Danny.
Leanne, thank you so much. Now, coming up, Yellen and Kashkari dish out their advice on how to deal with inflation. We're going to discuss that next with Thanos Papasavas from ABP Invest. Plus, later, we'll get more on the topic of sustainability. We have Credit Suisse's Marissa Drew joining us. This is Bloomberg.
The energy crisis, there's a lack of drivers. Is there anything that you need to ask authorities to do better or that your clients want the UK to do better?
I think we're at a moment in time where we're coming out of the pandemic and there are a handful of things going on. I think all over the world there are labor issues that are really a reflection of this transition out of the pandemic. There are supply chain issues. Some of this stuff is transitory. There are some secular trends that we have to watch closely. But I think we're adjusting and dealing with it as anybody else is. And I think leaders here are thinking about it the same way leaders are around the world.
When you look at the UK and, of course, some of these green investments that the UK and the City of London particularly has been really trying to pitch, you've been extremely involved in carbon offsetting. Can London really spearhead that movement?
Well, I think it's important that governments around the world partner with the private sector to try to get capital directed toward innovation in a way that we can accelerate the climate transition. And I want to emphasize it's clearly a transition.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
It is really still day one for AWS and for our customers. It is still so early in this business.
The pandemic has been calling the shots for the economy and for inflation. And if we want to get inflation down, I think continuing to make progress against the pandemic is the most important thing we can do.
The challenge is these high prices that families are paying, those are real and people are experiencing that pain right now. We need to pay very close attention to this. We need to take it very seriously. But my view is we also need to not overreact to some of these temporary factors, even though the pain is real.
All of these things go right at lowering costs for American families, and this bill is fully paid for. It's not going to add to inflationary pressures, quite the opposite, because we're going to pay for everything in this bill by raising taxes on big companies, large corporations, and the highest income Americans.
That was Treasury Secretary Janet Yellen and Minneapolis Fed President Neil Kashkari, along with White House top economic advisor Brian Deese, weighing in on how to ease U.S. inflation. Let's get into the inflation conversation more. We're joined now by Thanos Papasavas, CIO and founder of ABP Invest. Thanos, so great to have you on. Great to have you in the studio with us this morning. So I know you are squarely focused on not just the Fed, but the ECB as well. You've written, and you have written for about a year, that you're concerned about the ECB's nonchalant view on inflation. What do you mean by that?
Good morning, Danny. Lovely to be here in person again for the first time in a while. The market is rightly concerned about the ECB policies. We've seen the RBA moving. We've seen the Bank of Canada. We've seen the Bank of England adjusting towards a more hawkish
tilt, and we're also seeing the pressure being on the Fed to try and adjust. I believe, however, that the risk is not so much the Fed, but the ECB. I think the Fed will look at the data, and in my view, they have been a little bit behind the curve. We've been negative on inflation for just over a year, but as the data changes, the Fed will adjust its views, its analysis, and it will take action. And in my view, it will start raising rates in May or June next year. However, the key risk for me is the ECB, where the ECB, the underlying models and metrics missed the risk of inflation, and with the departure of Weidmann, that discussion, that debate, if you like, between the doves and the hawks is very much pushed towards the dovish side. So the risk for me is that the inflation maintains high in Europe, but the ECB does not take the underlying necessary positions. And we have, of course, risks such as the BTPs, the broader economic environment in the EU to be aware of.
I do wonder what you make of arguments, though, that Europe can't handle higher rates perhaps as much as the U.S. can, considering what debt looks like, perhaps in the weakness of markets like Italy, for example, that that the risk is moving, not necessarily waiting.
And I totally agree with that. And for that, exactly for that reason, I think the faster they move, the more prudent, the smaller the rates, at least it shows that they're aware, they're taking action, and they're ready to battle the risk of inflation. The worst case scenario, in my view, is to do nothing, and then have to overreact by raising rates more and then triggering a crisis in the peripherals.
What are the chances, you think, of that happening, of that latter scenario, of having to do, perhaps, as Andy Haldane puts it, the handbrake U-turn?
I think the risk is significantly higher after Weidmann's departure a few weeks ago. I do believe that the ECB is very much politically driven in some respects, and that the underlying factors may not show the signs of an inflationary pickup.
Of course, that concern comes as we look at European equities and, of course, U.S. equities hitting all-time highs. What does that mean for how you invest in these risk markets, which continue to hit all-time new highs?
Well, if we look at the broader asset allocations, I think we have seen a shift away from the fixed income towards alternatives, towards commodities, towards infrastructure, which can provide some inflationary hedge. In terms of the equity components, however, we tend to find the U.S. being more overvalued. And I think that the markets, yes, they gave a tick in terms of the recent earnings. Our concern is that if inflation does stay persistent, with the Fed having to adjust its rhetoric as to more hawkish, I believe we do expect a correction in the S&P, and more specifically, if you like, in the growth. So we like value versus growth within the U.S. market.
Of course, when people talk about equity returns and really this overall environment, 1970s continues to sort of be the corollary, that it's kind of the great unspoken concern. Is that fair? Are you concerned we get back to that type of environment?
No, and thank you for raising that as well, because we have been bearish on inflation. We do see inflation surprising to the upside and staying at elevated levels, but we do not see an inflationary crisis like the 1970s for two reasons. Number one, because we know what to do and how to take control and handle it. And number two, because those institutions still have the credibility or will be gaining back the credibility of the financial market. So I'm not worried about an inflationary crisis. I'm just worried that inflation will remain a little bit higher than those sort of average 2% levels that the central banks have been calling for.
Thanos, you're going to stick around with us. We have much more to discuss, I promise you. That's Thanos Papasava, CIO and founder of APP Invest. Now, coming up, Italy's Eni says oil prices could reach $100 a barrel, but only for a short period of time. We're going to get more from the CEO next. This is Bloomberg.
The past 18 months have reminded us how essential the PC is to work, life, learning, and connecting. And with Windows 11, we have renewed sense of the role Windows plays in the world. It offers personal agency and real choice to users.
Sydney. In San Francisco.
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I don't think if the oil prices continue to go up, what I know that there is a gap between supply and demand. It goes for 7 years, and then with 2 years of COVID, we didn't invest. The sector didn't invest enough, that we are investing more or less 50% of what we invested in 2013. So clearly, the demand is always the same. Now is rebounding. We are approaching 100 million barrels per day. So I think that this price is structurally strong because of the weak supply. So it's going to take some time before that oil companies and NOC and countries start again investing. Also, considering the volatile situation, that is not just the possible demand reduction, but also that now we are investing intensively also in other sources of energy.
Right. So are we going to reach $100 a barrel in the near term, in the next 6 months?
I don't know. I don't know, maybe it can reach, but not for a long time. Because what happens, when the price is too high, then there is less consumption. So it's not that people can spend a lot of money, and we saw also for the gas price that a lot of companies, energy intensive, that consume a lot of gas, they start reducing their activity. Sometimes they shut down. So high price is not good, and if they remain high for a long time, then also the activity, so the demand in general is going down. I'm talking about industry that are big energy consumers.
CEO of Italy's Eni speaking to Bloomberg from the ADIPEC conference on oil prices and demand. Thanos Papasava, CIO and founder of ABP Invest, is still with us. So we heard there the CEO talking about potential for oil prices to climb higher, however long lasting that might be. Are you in the camp that we could see triple digits on oil?
We had been positive oil, we've been positive copper, positive commodities because of our view on inflation. However, earlier this year, we turned neutral on oil. We think that the fair value of oil is between sort of $60 and $70. We believe that it's driven predominantly by geopolitics, sort of Russia, US, and Saudi are the key price decision makers. And it's to no one's interest for oil to continue appreciating towards the 100 level. It would not only decrease demand, as the gentleman said, but it would also potentially risk the economy's moving into a recession. So we are neutral, and if we were to reach those levels, I think most likely would be turning negative, everything else being equal.
What level do we have to get at that we start to see that demand destruction? Are we close there, or does it need to be around $100 a barrel?
Yeah, I think a little bit more pressure from here, and depends on the underlying economic data and the risks of inflation, what they will be doing to, of course, corporate earnings, but also consumer expectations moving forward.
Let's dig broader commodities. During the break, we were talking a little bit about gold. It seems for a glimmer of hope, maybe, no pun intended, for the gold bugs recently helping break out of really a year-long downtrend that we've been in. Where do you stand around the future of gold?
We turned positive gold in April. It was around the $1730, $1750. But I must convince that it's been one of our lowest conviction views, partly because on the one side, we maintain sort of a concern about inflation, which would be supporting gold. But on the other hand, we also expect the interest rate increases in the US and a firmer US dollar, which will be dampening on gold. So the reason we've maintained that positive view is because we feel that the Fed is most likely going to be a little bit behind the curve, and as a result, that will be giving the impetus for a momentum move higher into gold. So low conviction view, but have been positive gold since April.
Is there anywhere else in this market, because gold, of course, is this classic inflationary hedge, if the conviction is not that strong behind gold, where is more of a sure thing, if we continue to be behind the curve, that will make sense to hide out?
Well, I think one area is the more broad diversified commodities index, so the CRB index, or the Baltic Dry Index recently after significant corrections is there. So I think that commodity is not only an opportunity to diversify some of the inflation risk, but also it's an asset class which has been very much underrepresented across LPs and asset owners. So I do believe there's more impetus for that to continue moving higher. But apart from that, a relatively negative risk or duration on fixed income, and an opportunity within the private markets, and especially sort of infrastructure, real assets, property as well.
Yeah, I mean, it's interesting. I was just at Super Return in Berlin last week, where, of course, we're talking to a lot of people who feel the same way, that alternatives are the place to be. But one of the things that kept coming up is everyone wants to be in tech, and these are very expensive parts of the market, much like public markets as well. How do you get around the problem, or do you just lean into the priciness of some of these sectors?
No, I agree with you. There is an element of priciness in those. I think there are, however, opportunities which are not necessarily in that space. For example, moving into the ESG concept, the S of the ESG, because we've been talking a lot and hearing a lot about the E and the environment and the climate. But in my view, the S is underrepresented, being the bedrock of ESG. And there are significant opportunities in terms of social projects, social housing, investment opportunities through the private arena, which maintains a sort of an inflation hedge, plus the opportunity of growth.
Right. Thanos, really great to speak with you today. Thank you so much for coming in. That's Thanos Papasava, CIO and founder of APB Invest. Now, coming up, we're going to stick with the ESG conversation, and the COP Climate Pact. Countries agree on a breakthrough deal, but with some major compromises. We're going to get into what that means for green finance with Credit Suisse Chief Sustainability Officer Marissa Drew. This is Bloomberg.
Han profundizado el extractivismo en Argentina con más agronegocio, con más transgénicos, con más agrotóxicos, con más proyectos mega mineros. Y ahora, como si fuese poco, han avanzado, presentan un proyecto de ley que es la ley de hidrocarburos.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit Search Go to find answers now.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Good cop, bad cop, world leaders seal a breakthrough climate deal after some major compromises on coal. We're going to get into what it means for green finance with Credit Suisse's chief sustainability officer. COVID strikes Europe again. Austria sends the unvaccinated into lockdown as the Netherlands puts partial restrictions on the whole country. And Airbus scores the first big win at the Dubai Air Show with a mega order for 255 new jets. More from our interview with the company's CEO, Guillaume Ferry. Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Now, let's get an update from Glasgow after COP talks finally concluded. Negotiators clinching a deal over the weekend that aims to reduce the use of coal and boost climate change targets sooner. Critically, the rules for carbon markets have finally been established, setting the framework for a globally recognized system. Joining us from Brussels is our Europe reporter, Maria Tadeo, rather Glasgow. Maria, I know you've been stationed there for the past 2 weeks, soon back in Brussels, but what is the significance of the deal that they reached over the weekend?
Yeah, it's been 2 weeks now officially coming to an end. And well, Danny, when you look at this deal agreed on extra time on Saturday, there's three things that, of course, stand as the highlights. One is clearly that crucial 1.5 degrees Celsius stays alive. That was a priority for the UK delegation. You also have, in a way that is watered down, yes, but for the first time sees a very explicit reference to coal, facing down coal and other inefficient fossil fuel subsidies. And of course, you have this pledge to help some of the poorer, perhaps less developed nations make this transition from brown into green. Now, you put all of this together, of course, the big question remains, how do you implement this? How do you take it from paper to reality? And that is, of course, where the real deal will be. It's good to have this on paper, but how do you make it happen in real life? For a lot of the activists that we spoke to for the past 2 weeks, and of course, we know that Greta Thunberg was here. She was one of the stars of the conference, but it's not just about Greta. What they say is that it will really come down to the activism that we see from people on the streets, from consumer behavior really changing, and not just governments and policy. Of course, all of this puts together, it makes it very difficult to answer whether there's a good or a bad cop. I guess the key really will be in the implementation.
Well, at the same time, Maria, considering this was really last minute, trying to get India and China to the table, there was definitely criticism about that the deal could have been more ambitious. Is it just about getting a deal, putting words to paper, or is that worse than having a bad deal?
Well, you know, this is always a perennial question when you cover a COP, and you have to factor that there's almost more than 200 countries represented here. They have different interests, and of course, they're at very different points in their own transition into net zero. What I would argue in that respect is that, yes, the language around coal was toned down. It was watered down. India did make a last-minute push that took many by surprise. That was disappointing for a number of delegations. A lot of this, of course, also happening because of China backing the this move silently. But nonetheless, when I spoke to a number of delegations after the deal was agreed, they did say whether you look at face down or face out, what matters here is that there's a very clear signal that is coming out from this COP, and that is that the coal market, the coal economy has no future. This is not a good trade over the long term, and that message is coming clearly with this statement and this deal agreed here in Glasgow.
Maria, thank you so much. That's Maria Tadeo reporting live from Glasgow. Now let's continue the COP conversation, and we're joined now by Credit Suisse's Chief Sustainability Officer, Marissa Drew. Marissa, good morning, happy Monday to you. So we're just talking to Maria about some of the details of the agreement, and as we were just discussing, there has been criticism that perhaps it wasn't ambitious enough. What's your take on this agreement that COP26 reached over the weekend?
Sure. Well, I'm certainly glad that an agreement was reached, but I have to agree that we've got to get ambitious. You know, the issue that we have is that on the current trajectories, we are facing probably more like a 2.4 or 2.7 degrees Celsius rise, and that's going to mean around 15 times the level of catastrophic weather events, whether it be floods, wildfires, droughts, et cetera, than we have today. And that's pretty unsustainable. So it's wonderful that we've reached an agreement, but I think what we need now is to put it into action and accelerate the timetables, because we can't wait till 2050, 2060.
As we put it into action, of course, tapping into your expertise there at Credit Suisse, what does the mix need to be between government initiatives pushing this through in the private sector?
It's got to be both. We need the enabling conditions by policymakers and regulators to push the market along. Your team referenced an agreement on carbon. We've got to put a price on the negative effects, and that's really going to have to be at the hands of the regulator. On the other hand, the private sector has to and is making its own commitments. So as an example, Credit Suisse, we've committed to net zero. We have an entire program in place where we're taking a look at all of the companies that we lend to and we bank, and we're working with them on their transition, helping to fund that because it costs money. So we clearly have to play our role as a financial services institution. So yes, private sector, but those enabling conditions do come from regulators and policymakers. So it's all of us together.
What does the drive need to look like, though, when you're working with clients? Is it about the exclusion of clients who perhaps don't fit in that ESG bubble, or is it more about guiding them to a more sustainable future?
Well, certainly there are red lines. So, you know, we are in a world where coal really has no place. And so we've got to exit and help our companies exit any of their exposures to coal, and we should not be financing coal, you know, in the near future. We've got to have a phase out. On the other hand, you know, the world is still dependent on fossil fuels, and there has to be a transition process. And we can't just cut everything off today. That would mean a catastrophic scenario for all of us, right? We would have no heat, we'd have no electricity. And of course, the disproportionately affected will be those in the developing countries. So there's got to be a transition process. And there is very much this notion of we've got to invest in the transition. We've got to help companies raise capital to do that, fund that. And but we'd have to do it on a very quick timetable.
Well, in terms of those poor nations which need the help there had been a lot of talk about this around COP. What needs to be done in order to drive more evenness, more sustainability, where it's not just the wealthier nations who are able to put some of these various goals into action?
So clearly the highest carbon emitters historically have been in the West. And there is, I think, a responsibility and an obligation that we help those that are going to be disproportionately affected as we go forward. So what we're seeing out of the mouths of regulators and policymakers, and it's very much was a part of the theme at COP, is that we've got to figure out a way to help the developing countries along who don't have the financial resources to fund their transition. So whether it be by allocation of carbon pricing and providing some sort of subsidy to developing markets, whether it be other types of activities. So we could in the private sector raise funds for developing markets. We can touch on that in a little more detail if you like. But there are multiple ways, there are levers to do that. But I think we've got to be mindful of those who don't have the resources to help themselves.
Well, speaking of raising funds, amid COP26, you've of course launched this blue bond, and it's mostly in part for marine conservation for Belize. And looking whether it be a blue bond, a green bond, the word that typically comes up is greenwashing. What do investors in evaluating these different financial offerings need to look for in order to make sure that it's going towards the project at hand and it's not simply greenwashing?
Sure. So we worked actually with the Climate Bond Initiative to try to set out the idea of what a credible transition looks like. And there it needs to be ambitious. It's got to be backed by science. There have to be real KPIs that a company is subscribing to, and they have to hold themselves accountable and measure those outcomes. So they've got to report on those to the investor. The other thing is that we absolutely believe that there's a place for carbon offsets, but that's got to be really for the hard to abate or unabatable tail. We can't just have carbon offsets be there to allow companies a free pass to do business the way they have historically. Otherwise, we're not going to get global emissions down. So I think these are some of the key markers that investors should look for, is what is the role of offsets in the plan? Is there a plan? Is it robust? Is it backed by science? And is it measurable? Those are the key things that I would look at if I were an investor investing in any type of a transition instrument, whether it green transition bond or blue.
Right. Right. Marissa, really great to have you on the program today. Such an important conversation. Marissa Drew, Credit Suisse's Chief Sustainability Officer. Thanks so much for joining. Now, we also are at ADIPEC. This factors into the conversation of COP26 as well. And let's get over to Yusuf Gamal-Din, who's been speaking to some of the key figures from the oil industry at ADIPEC.
Like the minister from Equatorial Guinea mentioned, the IOCs are coming to them and saying our shareholders are not approving the investments because the bankers are not or the international institutions. Yeah. I think that is an issue.
Quick follow on calls for the U.S. president to inject some of the inventories from the strategic petroleum reserves. Do you think it would make any difference at all if they do take barrels out from the SPR to bringing down the price of oil?
First of all, that decision has been taken before, and that decision has been announced, and it's a normal. So it has a normal cycle. The U.S. have been doing that for a very long time, and I think they'll continue doing that until 2025. They will release, and then they'll buy at a certain time, and that is the business of the United States. It will continue doing that. I think what is important is looking at the longer term of the supply and demand balance, and that's what we are concerned about. So what's going to happen in the first quarter, second quarter of next year? And that's where we see that we will have a surplus in the supply. So we are not going to continue having this problem that we are seeing today, moving to the first quarter of next year. And that is the comforting news. The issue, though, is to have a longer term on how much we need to supply as we go to beyond 100 million barrels.
Just a very last question on compliance. Are you happy overall with the quotas?
I think the compliance is not an issue. We are over-delivering. It's been 115. Now, the question comes from some of the countries have not been able to bring back their production. Again, what is the cause? Lack of investments. So we need to come and incentivize bankers and IOCs to come and invest again for those countries to come back to their production. That's the solution. Thank you.
All right, really fascinating conversation there. That was Yusuf Gamal-Din speaking to the UAE Energy Minister, saying that in the second quarter of next year, they see a surplus in supply. That obviously presents the issue if they were to step up supply right now. How does that bode for next year? That's not something they want to get into if it means that we'll have that cyclical nature in oil supply. Well, I also want to bring you some live pictures coming from the UK COVID presser, announcing there during this press conference in Downing Street that now they are expanding expanding its COVID-19 booster program to younger people, really trying to seek to head off another wave of infections this year. We've heard from many leaders from the nation saying that they do not want to have another lockdown. So boosters, a huge part of that effort. They're now giving a third vaccine to people aged 40 to 49, starting 6 months after their second shot. Also, only those over 50 had been allowed to get the booster. So it's about 12 million so far who've gotten their third inoculation. A government also recommending a second shot of Pfizer vaccine for 16 and 17-year-olds. So that is the presser you're looking at now. Coming up, easing tensions. Presidents Biden and Xi meet virtually today as the two countries look to stop relations from worsening. More on that next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Now, Airbus has booked a mega order worth more than $30 billion for 255 narrow-body A321 jets at the Dubai Air Show. The deal will be shared with various carriers, including Wizz Air and Frontier Holdings. CEO Guillaume Faury spoke from Dubai with Bloomberg's Guy Johnson.
This is confirming that airlines start to look at the horizon. We see the traffic rates going up. It's still a COVID-19 situation. We are not back to where we were in 2019, but I think we start to see the light at the end of the tunnel.
We've just seen the reopening of the North Atlantic. Are we going to see, Guillaume, the transition from this being a narrow-body recovery, which speaks to the order we've just been talking about, the Wizz order, to a wide-body recovery? When do we start to see big numbers for the bigger planes?
That's a very important question, and thank you for asking. We see the recovery as well on wide bodies and very long-distance flights, international flights, but not to the same extent. We continue to believe it will take more time to have the long-haul flights back to what it was in 2019. So we see the full recovery between 23 to 25, and it's going to be earlier for single-aisle business than for wide-body business. When exactly, we don't know. We think Asia will probably also take more time to fully reopen, so there's still a lot of work to be done.
Guillaume, let's talk a little bit about the freighter market. The freighter market has kept many airlines going during this crisis. I was talking to Shai Weiss about this other day from Virgin Atlantic. He certainly sees a big story going forward for freight. You do clearly as well. You've got the new 350F, the freighter. When are we going to start seeing big orders for that? Are we going to see a big order for that at the show? What are we thinking about the structural change in the market as a result of what freight is doing right now?
The freighter is a segment of commercial aviation that is not very big in terms of number of planes, but has played a huge role, has been a very big help in the pandemic for many operators. And we see a shift in the way goods are transported around the world. There's a lot of value that is carried by air, not necessarily the heavy goods, but the ones that have a high value and don't like to stay in inventories or being carried around the world. And we believe the cargo market will continue to expand. But there's also a structural change just ahead of us. There's a lot of old planes that need to be retired. Operators want to replace them by more fuel efficient and carbon neutral planes. And we see also the ICAO has put in place a regulation that will make those older planes not being able to be delivered 2028 onwards. So that's the moment where we come with the A350 freighter. That's a great platform for a cargo plane. It's going to enter into service in 25, and we'll see orders coming soon. At the show, after the show, we'll see. But obviously, we are in discussions for orders on that plane.
Airbus CEO Guillaume Faury there speaking to Bloomberg's Guy Johnson at the Dubai Air Show with some cautious optimism there. Let's get now to your Bloomberg Business Flash. Here's Leanne Gerrans. Good morning, Leanne.
Good morning, Danny, and thank you. Heineken has agreed to buy South African wine and spirits maker Distell Group for 2.2 billion euros. The takeover creates a new regional group to compete with larger rival AB InBev and spirits giant Diageo, as well as its signature lager. Distell makes a Savannah cider and a number of wines for export. Now, Boeing says it is optimistic about resuming Chinese orders and deliveries for its 737 MAX after the country's regulator signaled that it's close to clearing the jet to fly. Speaking to Bloomberg, the jet maker's head of commercial airplanes says he is looking forward to having the MAX back.
We're hopeful that we can do that soon. We've seen some orders on freighters that have come through, and we're just encouraged.
Now, we will bring you interviews with leaders from Boeing, Airbus, and some of the world's biggest airlines throughout the day here on Bloomberg TV. All 10 companies making their debut on Beijing's first ever stock exchange have rallied on their initial day of trading. An auto parts maker was a standout performer, jumping 511% in early trading on the Beijing Stock Exchange. The new bourse is intended for small and medium-sized enterprises that have long faced difficulty raising capital over in China. And that's your Bloomberg Business Flash. Danny.
And thank you so much. Now, coming up, the world's richest person spent the weekend sparring, or perhaps a better word is trolling, U.S. Senator Bernie Sanders. A very unlikely interaction. We're just going to discuss that next. This is Bloomberg.
finally got your taste of MIT. So why did you decide to leave MIT and come in and run the SEC?
One, when a president asks you to do something, it's really hard to say no. But it's also just an incredible privilege and an honor to serve.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Now, Elon Musk spent the weekend sparring or perhaps trolling U.S. Senator Bernie Sanders. It all started when Sanders tweeted that the wealthy must pay their fair share. In subsequent tweets, Musk suggested that he'd be willing to sell more Tesla stock. Let's bring in Bloomberg's Craig Trudell. So, Craig, I mean, what an interaction that the two had over the weekend. I mean, it's really remarkable because this was pretty unprompted from on the part of Bernie Sanders and Elon Musk.
Yeah, I think it was interesting that Sanders didn't call out Musk by name whatsoever. It almost gives the impression that Musk was sort of looking for a fight and kind of actually looking to sort of ascribe a reason for further share sales. I think we ended last week with him offloading almost $7 billion worth of stock to get to the 10% threshold that we remember just a weekend before was what he said he was going to sell as part of that Twitter poll that he took. He'd have to do more selling. So it does seem like he was kind of spoiling for a fight, strangely, this weekend. We know that Sanders is not shy about calling out billionaires by name. He's actually attacked Musk and Jeff Bezos in the past. So it really looked like Elon was kind of, looking to keep this, framed as I'm selling my shares in order to sort of, make these politicians pipe down about me not paying my fair share.
Right. Of course, that's not necessarily the opinion of the big shorts, Michael Burry, is it?
It isn't. Yeah, it's interesting. Just 6 days ago, he was speculating as to whether or not Elon was, looking to cover some of his personal debts, and that was what this was all related to. He seems to have changed his tune and talked about the idea that maybe this guy just wants to sell his stock. And I think it's an interesting sort of evolution in his view of, what's sort of behind all of this. And it speaks to how this is sort of the talk of the markets. Everybody's, got a theory as to what's going on here.
Right. And maybe the next theory is he sells and he buys Bitcoin. So it's good for crypto. It's such a fascinating story. Craig, thank you for tracking it and reporting on it for us. Certainly not the easiest one to do. That's Bloomberg's Craig Trudell. Thanks again for joining us. Now, Bloomberg Surveillance Early Edition is going to continue in the next hours. We look at stocks hovering around all-time highs. And also starting from tomorrow, we're going to be live at in Singapore for the Bloomberg New Economy Forum. We have guests from Moet to David Solomon. So stay tuned all this week. This is Bloomberg.
хорошо подготовлены, насколько это было возможно за столь короткие сроки. Это на самом деле эксперимент.
Поэтому мне не хочется употреблять такие слова, как страх, боязнь и все прочее. Мне хочется говорить, что это очень волнительно, но одновременно и радостно, потому что, ну, вы же понимаете, как мало людей вообще там были. А у нас есть возможность полететь в космос, и не просто полететь в космос, а сделать там то, что мы умеем по-настоящему хорошо делать на Земле. Это снять кино.
Тоже это не просто вот в чем дело-то. У нас же экспериментальный во многом этот проект. Поэтому мы сейчас столкнемся с кинематографическими нюансами, которые мы могли предвидеть отчасти, какие-то, наверное, не могли предвидеть. То есть, несмотря даже на то, что, опять же, все делились с нами там, космическим опытом и так далее. Но это первый раз. Ну, то есть второй будет проще.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
People are talking about Bloomberg surveillance.
There's some guy out on Twitter who says I look like I'm 101.
I noticed that.
Do you think I need a lift? Is it time
What
that
did he say about me? What did that particular gentleman say about... Let's have a look. One of them is near 101 years of age.
Which one would that be?
The other has an ego in the orbit of Mars. Who's that?
I have no idea.
Mrs. Lisa, the only chance to productive conversation. It's a fairly accurate summary of this show, isn't it, Tom?
The eyes, or should I do the whole thing?
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Generally, we've already seen this year that equities are going to be one of the most resilient asset classes.
You need to look for older sources of diversification than just what equities and bonds can offer you. I actually think there's going to be much more potential for regional diversification.
I think emerging market investors are really watching to see what happens with China. It's too big to ignore.
This is Bloomberg Surveillance, early edition with Anna Edwards, Matt Miller, and Kaylee Lines.
It is 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. China's economy stabilizes. Retail sales climb, so does industrial output, but a real estate slump shows the recovery isn't on solid ground just yet. Plenty to talk about. Joe Biden and Xi Jinping prepare for their first virtual summit, but expectations for the meeting are low. And breakthrough at the climate conference. Countries agree to end fossil fuel subsidies and boost their climate targets sooner, but they put off the hardest decisions until later. Welcome to the program, everybody. I'm Anna Edwards, live in London with Tom McKenzie. Matt Miller is with us in New York. Kaylee Lines is off this week. And Matt, when it comes to the markets this morning, there is so much to look ahead to, so much potential for volatility later on this week. It sort of feels like maybe the calm before the storm.
Yeah, it is a little bit calm, actually, although we got some data out of China that pushed in kind of both directions, and we're going to hear a lot more about that from TMAC and from Enda Curran as well. The CSI 300 right now down. China had better than expected retail sales in October, but it also had an easing of fixed asset investment, which is concerning on the property side. Nonetheless, throughout the rest of Asia, big gains. I mean, you see the Kospi in South Korea up more than 1% at the close. The Nikkei was up more than 0.5%. So as you get closer to the mainland, things cooled off a little bit. I will point out that we had a continued recovery in this dollar junk debt that all of these property developers have issued. Ever since the Evergrande saga, I've got a chart here. Ever since the Evergrande saga, it just comes down. And I'll welcome our radio listeners and tell you, this is a chart that shows just a big drop in the debt, but it's bounced up a little bit at the very end of the chart. So this recovery continues. We'll keep our eye on that. In terms of what's going on in the U.S., take a look at futures here. It's interesting because we see gains in U.S. futures. They're slight, selling in gold and selling in crude as well, although you do see investors buying bonds a little bit. Here's Bitcoin up 2.5%. Right now, just under $66,000, and there are going to be a lot of movers on Bitcoin in terms of miners in terms of exchanges today. So that's something to keep an eye on. But what I found really interesting was the real yield. Even as the 10-year kind of bounces out of a bottom right now, the real yield is at the lowest level that we've seen it, now down again to negative 120. And if you keep your eye on that, it's almost at a record low. So maybe somewhat of a concern. Tom?
Yeah, Matt, in terms of what we're seeing in Europe, it's pretty muted today, but the picture is that you've had 6 weeks of solid gains across the European markets, very much still at those record levels. Bit of divergence in terms of what you see in the UK. We're waiting for labour data and wage data out tomorrow, which will give some guide towards that meeting in December for the Bank of England after the surprise in November. It's more pronounced in terms of the gains that you're seeing on the continent. France gaining 0.3% in terms of the CAC Quarante. DAX also up by 0.1%. Similar territory over in Italy. We're also looking ahead to the testimony from the ECB's Christine Lagarde later today in front of the European Parliament. What will she have to say about inflationary pressures as they look ahead at the ECB to that very important December meeting as well? By the way, Morgan Stanley, the team there, suggesting that as you look to 2022, you want to reduce your exposure to US equities and bulk up on European equities and Japanese in terms of where we are in the cycle. Let's see how things are playing out then across the assets. Again, the benchmark, you're up 0.1% at record levels, but looking for catalysts, it seems, across these European markets. Euro dollar is at 114. Brent crude under pressure, down by 1.3%. We're still waiting for clarity as to what the Biden administration will do in terms of those strategic reserves. Iron ore is also lower by 1%. We had better data out of China, as you're saying, but pressure still on the property sector. That demand for iron ore still a concern for some. Anna.
And Tom, you were just mentioning Christine Lagarde will be speaking, and she is doing so just now. We're getting some headlines dropping from her address today, saying that growth momentum is moderating somewhat, talking about the Eurozone economy here, saying supply bottlenecks are weighing on manufacturing, and that's certainly something we've seen. And a theme we will return to shortly, she says that COVID essentially isn't over. The pandemic challenge isn't over yet, and we'll certainly talk about that in a European context shortly. Now look at taking a look at some of the events that are on our agenda for the week ahead. US President Joe Biden and China's Xi Jinping meet in their first virtual summit tonight. There's plenty to discuss, including the origin of COVID-19, human rights, and the future of Taiwan. How much meeting of minds will there be on any of those subjects? The White House says President Joe Biden will sign the Bipartisan Infrastructure Investment and Jobs Act today, long awaited. US retailers report this week, and we'll also get US retail sales data. Rising prices and shortages due to supply chain constraints mean retailers could face a tough quarter. We saw a 10-year low in consumer sentiment during Friday's session. That's crucial, of course, given the role of the consumer in the United States. And on energy markets, energy ministers, policymakers, and leading execs in the oil industry are gathering at Abu Dhabi's conference, International Petroleum Exhibition and Conference, also known as ADIPEC. We'll be live there shortly for the latest on what seems to be an unmoved OPEC Plus grouping. They don't seem to want to change their policies when it comes to production levels then, Tom.
Yeah, and switching focus, or at least we discussed this, the China data, which came in more positive than some had expected in October. That's as retail sales climbed and energy shortages eased, but a slump in property and rising COVID outbreaks show the recovery is not yet on solid ground. Let's get more then with Enda Curran, Bloomberg's chief Asia economics correspondent. Enda, your key takeaways from this data, which broadly came in, as we said, above the estimates, but there's still concern about the fragility of this economy and the recovery in China.
Exactly right, Tom. Clearly some upside surprise here, a better read on retail sales, industrial production helped by, as you say, what looks like an easing of the energy crunch. Some factories had been complaining of power shortages, but that seems to be working its way through the system now. But, you know, economists are quick to say, wait a minute, retail sales may have been impacted actually by higher prices, by consumer inflation. That's probably what's driving up the headline figure there. And on the broader story, you only have to look at other data released today, which show that house prices continue to fall. So that means the real estate sector is still under pressure. We know the big developers are under pressure in the credit markets. So I think today the net takeaway was, sure, better headline readings, but the bigger picture story of China's economy losing momentum into the year end is very much intact.
And we're going to see a summit with President Biden and President Xi, at least a video conference summit. What does Xi want from this?
But clearly expectations are being managed by both sides, really. There hasn't been much in the way of anything that would suggest a major breakthrough. We know that Xi is coming into this, Matt, from a fairly strong position after last week having that all-important party plenum, more or less cement another term for him if he wants it. You know, obviously on the table, China have been explicit in the past. They would look for some breakthroughs on trade. They want an end to US tariffs. There isn't really any indication, though, that we're going to get breakthroughs like that. It's possible there could be some meeting of minds in terms of people-to-people flow, in terms of visa restrictions. But, you know, in terms of the laundry list of concerns between both sides, from Taiwan to Xinjiang to technology, I don't think anyone's going to expect a major breakthrough in one phone call. I think the big takeaway, especially for economists watching this, is that at least the leaders of the world's two biggest economies are speaking to each other, but that might be about as good as it gets.
Yeah, we did see at least at the COP26 summit that these two nations can work together when they want to, so we'll bear that in mind. Enda, thank you very much. Enda Curran, Bloomberg's chief Asia economics correspondent with the latest on China themes. Anne-Marie Hordern, Bloomberg Washington correspondent, joins us from DC for what President Biden hopes to accomplish from the summit then, Anne-Marie. We've heard the Chinese take this morning. What is it that the Americans want to get out of this?
Well, like Enda's saying, there's really no clear deliverables, but what U.S. officials say is that they want to at least be able to have a frank conversation on the leader level between President Biden and Xi Jinping to discuss rules of the road and how to basically put frameworks and guardrails on this competition. But as Enda's saying, there's going to be a litany of issues that are likely going to come up, whether it's trade, whether it's Taiwan, whether it's human rights. One thing we do know that's likely not going to be decided at this meeting is the U.S. consulate in Chengdu and the Chinese consulate in Houston that were closed recently. But this is really the first time they are meeting face to face. And what U.S. officials think going into this meeting is that President Biden comes in with a very strong hand off of the meetings he had with allies and partners to try to approach China in a multilateral approach at Rome. And also the fact that he's going to be signing in an infrastructure agreement. He was able to get bipartisan support in the United States just hours before he enters this meeting.
Anne-Marie, on another note, it looks like Elon Musk continues to taunt Washington senators. Ron Wyden was the first last week, and now Bernie Sanders. Has there been any reaction from D.C.?
Well, I think this is something that is just going to continue. This is not the first time that Elon Musk is going to taunt or chide U.S. senators, and it's certainly likely not the last. But also, it's definitely not the last time you're going to hear from Senator Sanders saying that the wealthy need to pay more in taxes, and potentially hear more about it this week as the House and Senate come back, and the House has to work to try to pass the Build Back Better, and the Senate is going to get that next agenda and start marking it up. But this is also from Senator Sanders in March, who said that the wealth of Elon Musk and the likes of Jeff Bezos is, quote, immoral. So potentially Elon Musk hasn't forgot about that, and he might continue his trolling.
Okay, Anne-Marie, yes. I mean, this conversation went on for hours. I don't know if it's not quite a conversation, is it, when there's only one side speaking? But Anne-Marie, thank you very much. Bloomberg's Anne-Marie Hordern in Washington. Now over to COP26. After 2 weeks of talks, negotiators from almost 200 countries clinched a deal over the weekend that aims to reduce the use of coal and boost climate targets sooner. Let's get more from Bloomberg's Maria Tadeo, who's been camped out in Glasgow for much of the past 2 weeks. Maria, what is the significance then of this deal? So much has been written about it, what it does and doesn't include and doesn't mean. What conclusions can you draw?
Yes, Anna, and that is always a difficult question after you cover a COP26 meeting. Was this ambitious enough? Was it good enough? And will it make a difference when it comes to climate change? What we do know is that there's three things that stick out with this deal that was approved here in Glasgow on Saturday. One, of course, is that the 1.5 degrees Celsius temperature check, that still stays alive in the document. We also have what is the most explicit until now call to phase down coal and other inefficient fossil fuel subsidies. This is a breakthrough of sorts. It is true, was watered down by India from phase out to phase down, but nonetheless, some of the delegates that I spoke to after the deal was agreed said that it is sending a message. The coal coal economy has no future. And then, of course, you also have the establishment for a framework of carbon emissions trading, a big global ETS. Scientists have said that if you want to remove carbon emissions, you have to be able to trade the credits, trade the offsets, and measure it correctly. This could be the first step. But again, Anna, the question is the implementation. That is where the real deal will show. And of course, only time will tell whether or not they succeeded in toning down global warming and the heating of temperatures on the planet.
Maria, thanks very much, Maria. Today they're reporting from Glasgow after an agreement has been reached. Let's take a look at some of the stocks in the pre-market this morning. Tesla is one we're going to be paying close attention to. As usual, Elon Musk, as we were just talking about with Anne-Marie there, tweeting that he might want to sell more shares, almost asking Bernie Sanders to tell him to. That's maybe not a great sign, and they're down in the pre-market this morning. Boeing, on the other hand, is up, and there's been good news out of an air show with Airbus saying that the recovery is on track. They have an order for 255 of their wide-body jets. Boeing also looking to restart production of its 787 Dreamliner and looking to get recertification of the 737 MAX in China. So investors are positive on Boeing this morning. And then IBM could be creating, or could have created, according to Axios, the first quantum computing chip. It's capable of computing like 127 qubits of data. I have no idea what that means, but it's a lot more than a regular computer, apparently, and the stock up 1%. So keep your eye on Big Blue this morning, Anna.
Okay, yeah, are we years or decades away from a fuller role for quantum computing? It seems to be some of the conversation coming out of that article. Let me just recap some of the lines we're getting from Christine Lagarde of the ECB. She's speaking to European members of Parliament. She's going to be taking questions shortly, but some of her prepared remarks already hitting the tape. She said already this morning that the growth momentum in the Eurozone is moderating somewhat. Supply bottlenecks are weighing on manufacturing, which we've been following for a while, of course. She says there's no evidence, and this is interesting, that faster inflation is feeding into wages. So that's good news if you're looking to not see contagion effects into the wage story. And conditions for rate hikes are very unlikely to be met in 2022. That is something that the ECB has said before. They continue to push back against market expectations for rate hikes. We'll continue to monitor all of that for you. This is Bloomberg.
Is there at the moment amongst the asset managers that actually some of the ESG labeled products, then if you probe, are not green?
Well, look, there is some stress, and it's great that there's that scrutiny, and there's that skepticism or healthy skepticism about ESG labels or sustainable labels. And that, again, is one of the reasons we're having this ruthless, relentless focus on net zero, because in the end, look, we can't stabilize the climate unless we get to net zero. And it's a simple, these are hard numbers. Your emissions are either A or B, they're going up or down. And if they're going down, are they going down consistent with the science? We anchor it in the science, the same science the UN and others use for the 1.5 degree objectives.
Should this not be compulsory? Should we not have regulators coming in and saying, look, this is a new definition, you stick by it, and we're going to measure it?
So I think it's a great question. So let's look at what happened with TCFD, climate disclosure. 6 years ago, you and I were in Paris. We talked about this. We talked about other things. Now that's moving to become mandatory.
I was just finishing what you were saying, Tom. November 3rd is when the decision is. Just in case people got confused, I will. Just one more story, Tom.
Yeah, thank God for that.
We're at 137 right now. Into weakness. Is this where they play the music and the Academy Awards? Is this it? Do I thank my mum again? Are you in charge of this?
Is she the only one?
Kill the music. You know who's in charge here.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Anna Edwards and Tom McKenzie in London. Europe is battling a fourth wave of coronavirus. The rate of infections in Germany hit a new record high for the entire pandemic. Meanwhile, Austria is putting unvaccinated people under lockdown, although it seems pretty light. Joining us now from Vienna is Bloomberg's Jonathan Tyrone to talk about what's going on there. Jonathan, it's pretty shocking that this new wave has come back, especially in the Germanic core of Europe. Why?
Well, it's the same thing that followed along the third and second waves. Gets colder, people go inside. Unfortunately, in Austria and parts of Germany, the vaccination rate isn't as high as the authorities wanted it to be. Here in Austria, we're about 64%. Vienna, the capital, is doing fairly well. Our incidence per 100,000 people here in Vienna is about 400. It's in the provinces, especially along the provinces that border parts of Germany, where you have a real serious spike in cases, 1,200 incidents per 100,000 people.
Jonathan, why is there a reluctance amongst some in Austria to get the vaccine? What is holding that vaccination rate back, and how is it breaking out across the rest of the Eurozone in terms of infection rates?
Yeah, well, I mean, there's a strong but vocal minority of people that call themselves lateral thinkers who are protesting frequently on the streets against face masks, against the vaccine. The government yesterday announced that the new rules, which are putting a lockdown on unvaccinated people, preventing them from circulating in places like fitness studios, cinemas, retail shops. You know, this is all intended to drive more people to vaccine stations to get vaccinated. The early indications based on the lines at vaccination centers is that more people, in fact, are going. There's quite a long line at open stations.
Okay, so it is maybe having the impact that the government wanted to, Jonathan. I mean, just tell us a bit more about the Austrian rules here, because they are, I don't know if it's probably not the first time in the world that we're separating people into vaccinated and unvaccinated. There are plenty of other instances of that, but there's not much of it in Europe.
Well, I mean, it definitely carries a political risk. I mean, it's the equivalent almost of like a stop and frisk campaign without the frisking, because the police have made very clear, the Interior Ministry made very clear yesterday that everybody is subject to being stopped by the police. They're going to be asked whether they have a vaccine passport. If they're caught going into a place where they shouldn't be, an individual will be fined 500 euros, and the business owner or proprietor will be fined 3,600 euros if they're caught allowing people in who shouldn't be there. So, I mean, you know, there's a broad security element to these new rules, and we'll see how that plays out politically and public health-wise in the days and weeks ahead.
Jonathan, thank you very much. Thanks for joining us. Bloomberg's Jonathan Tyrone joining us there from Austria with the latest on the fight against the virus there. Just getting some other headlines coming through at a European Union level. The EU backing new sanctions powers on Belarus over migrant flows, and this goes back to a story we've been covering for a week or so about a buildup of migrants on the Belarus-Poland border, and the EU has suggested that the Belarus president has been putting them there. The Belarus president denies that, and we have to look for details now then as to what these new sanctions powers will include. This is Bloomberg.
common ground on energy that you share now with the Prime Minister of the United Kingdom?
We are both very committed to the transition to a net zero future, and as part of that, to building up the renewable energy capacity for Scotland and the UK. Scotland has got massive potential in wind energy in particular, onshore and offshore, but also some real potential in new and emerging technologies, carbon capture and storage, for example. There's also, I think, an understanding, and perhaps the UK government and I don't entirely agree on the detail of this, but we must accelerate the move away from fossil fuels. We've got to do that carefully in a way that protects the people who are currently employed in that sector, in Scotland around 100,000 jobs, and do it in a way that doesn't see us importing more oil and gas, but instead moving to the alternatives.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
It is really still day one for AWS and for our customers. It is still so early in this business.
You talk about hiring aggressively at the moment. Can you walk me through how challenging that is at the moment? How difficult is it to find the right people?
Well, things have changed. Again, the world has changed under the pandemic, and you all know worldwide, you know, what the challenges with getting people back into the workforce.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back. This is Bloomberg Surveillance Early Edition. I'm Tom McKenzie alongside Anna Edwards in London and Matt Miller in New York. Let's get the first word news. Senate Majority Leader Chuck Schumer wants President Biden to tap the Strategic Petroleum Reserve to help lower gasoline prices. Schumer says that consumers need immediate relief. The president has hinted he may take action on fuel costs. Polls indicate many Americans blame the president for failing to contain inflation. Meanwhile, Treasury Secretary Janet Yellen said controlling the coronavirus in the US is the key to easing inflation. Yellen told CBS that continuing to make progress against the pandemic is the most important thing to do. Yellen says she expects inflation to decline by the second half of next year. A new study finds that Pfizer and BioNTech COVID shots resulted in the strongest immune response. Researchers looked at 4 vaccines. They found that people getting Sinopharm's inoculation may be particularly susceptible to a breakthrough coronavirus infection.
Coming up on this program, Ed Clissold, Ned Davis Research Chief U.S. Strategist. We'll talk to him about the impact of inflation and what that is doing to his strategy right now. Where is he going to protect his portfolios from inflation? We'll ask him about that. We'll also talk to him about the state of the U.S. economy. More analysis next. This is Bloomberg.
The 700th anniversary of Dante Alighieri's death has triggered the work of many institutions and offered a very rich schedule of events. Today in Santa Croce, we present one of these projects that suffered a difficult start because COVID-19 has stopped the project that was shared by the Opera di Santi Croce by the Franciscan community from Florence Municipality and the Fund for Religious Building of the Internal Minister. Today, Felice Limosani's project is finally enjoyable. In the Pazzi Chapel, the marvelous architecture by Filippo Brunelleschi, the most important images from the Divine Comedy created by the French illustrator Gustave Doré. Through these images, we can live the violent emotions of hell, the weight of purgatory, and the sublime joy of paradise.
The digital humanities are a cultural occasion to exploit. Summing up, it's about merging humanistic disciplines with new technologies. I find this to be an innovating and modern tool to update culture. Cultural heritage becomes something to hand over to the new generations and not to be put aside. So it's about using technology, pixels, and binary code with a human and humanizing content.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards with Tom McKenzie in London and Matt Miller in New York. Kaylee Lines is off this week. And Tom, really interesting when you're looking at the European equity markets, not moving anywhere very fast at the sort of aggregate level. But if you dive down into the details, basic resources are a real laggard, and that always worries the London market.
Yeah, that's a drag on the FTSE 100, and certainly the pressure on iron ore as a result of what we're seeing in China. Yes, the economic data was more positive than the estimates, but you break it down, you look at what's happening in the property sector beyond all the chaos around Evergrande, and there is no sign that officials are going to be walking back on that, so that demand for iron ore, which feeds into the real estate sector, is what's weighing on that, and that's affecting basic resources this morning.
Yeah, absolutely. So, and that ties in with inflation conversations, doesn't it, Matt? And it was really interesting to see on Friday the consumer sentiment data touch a 10-year low in the United States as a result of everybody's concerns around inflation going higher. Inflation seems to be talked about a lot on the Sunday programs, the Sunday talk shows. Inflation still very much part of our conversations as you look ahead to the start of the U.S. trading day.
Absolutely, and I have a great look at what inflation is doing to yields. First, let's take a look at what's going on in the markets. As you mentioned, we have gains in Europe, although they're incredibly slight, only 0.07%. So the inner machinations of the stock 600 are interesting, Anna, but if you look at just the benchmark index, not so much. S&P futures up about 0.2%, so we could see stronger gains here than we do in Europe. And the U.S. 10-year yield not doing very much, but look at this, 154.26, and here you see crude is down 71 cents. 154.26, but when you factor inflation in, I've got to look at what real yields are doing. The real yields are coming down to lows like we've only seen a couple of times previously, and that over, of course, the pandemic period. If you were to look at a chart on just the 10-year yield, you'd see a dip for those of us listening on radio in 2020, and then a bounce back. But if you factor in inflation, that dip keeps holding us down to negative 120 basis points. So I think the real yields are really important and really interesting to look at, Anna.
Yeah, absolutely. Real yields, also real earnings, real EPS, and what is being delivered there by corporates, also something worth looking at. And I have another chart that really illustrates that point, Matt. And for those listening on radio, I'll just describe what we're seeing here. This is S&P 500 earnings yield setting a record low after adjusting for inflation. So if you adjust this for inflation, this is the real earnings yield on the S&P 500. You'll see it's only been negative in the 1970s on 2 occasions and now, basically. I mean, very short periods in the early 2000s or late 90s and mid 2000s. But essentially, we are in a new era when it comes to looking at the earnings story here. And I just wonder what this does to our assessment of where we invest and where we put our money if this is what we're seeing from corporates. Let's get to our next guest then and get some perspective on this. Ed Clissold, Ned Davis Research Chief U.S. Strategist, joins us. And Ed, how much, I mean, we can adjust all sorts of things for inflation. Today, I'm adjusting the earnings yield story for inflation. How much of is this, this just really illustrates the damaging effect that inflation can have, not just on consumer sentiment, as we saw on Friday, but also on the earnings story out of corporates?
It certainly does. And I think that the big question is how much can companies pass on to their customers, or how much do they have to eat in terms of their profit margins? So far, profit margins are at record high. So companies are able to pass it along. And as long as that's the case, it's probably going to be okay for equities. But at some point, that is going to become somewhat of an issue, and it's probably going to hit earnings growth in 2022 as a result.
In terms of the inflation effect, we heard from Christine Lagarde, who runs the ECB, earlier that she doesn't think it's going to stick. Is it different in the U.S., Ed?
Well, ultimately, it's going to be transitory, and that's the buzzword that's probably gotten a lot of flack, and justifiably so, because transitory keeps getting longer and longer. But we've been in the camp for a while that transitory is going to mean a year or longer. It's probably going to be at least 18 months before the headline inflation numbers in the U.S. get close to 2%. So it is going to be a little bit sticky, but this ultimately has to do with the size of the stimulus that has been passed and supply chain issues. So ultimately, we're going to see inflation come back down, because the bigger things you're talking about, potential GDP growth, demographics, and the like, those are supporting lower inflation. So that's probably the end game. But when you're in that period, Matt, even since 1980, when inflation peaked in the U.S., when you get these spikes of inflation that have all been transitory by definition, because inflation keeps going down, stocks have paid attention. The S&P has struggled when you get the CPI a lot above its 5-year average, which obviously it is right now.
So, Ed, how do you inflation protect your portfolio in the here and now?
Well, so I think it's a mix of different sectors. You do want some resource sectors that can take advantage of higher commodity prices, but also focus on companies that can pass those costs through and have pricing power. So those are going to be the areas we focus on as well.
Okay, what about defensive stocks? You point out they've underperformed. Are we getting to a point where there's going to be a reversion to the mean? Is that where you get in?
Yeah, it's probably more of a 2022 story. The momentum for the stock market looks pretty good into year end, so it's more of a risk-on environment. But if you look at defensive sectors, we call them shut. So staples, healthcare, utilities, and telecom. They are some of the most oversold readings we've ever seen. Even at the early stages of a bull market, where they tend to do poorly, they're even worse than they have at other bull markets at this point in the cycle. So once the environment turns to more of a risk off, the potential for them to outperform is going to be quite significant. But again, that's probably more of a 2022 story than an end of 2021.
Ed, when you look at energy stocks and the energy sector, another sector that some people have suggested has underperformed, do you think COP26 and other summits like it, all the politics around climate change and energy transition, is putting effective guardrails around that sector and allowing people like you and others within the investment space to work out what is and is not going to be, the right kind of investments in this transition?
Yeah. It's ironic that all of the talk about green energy is actually causing energy prices to spike, because why would an energy company want to invest in a multi-year project if they don't know they're going to be able to reap the benefits from it? So that's the conundrum. That's why you've seen U.S. oil production continue to be below where it was at pre-pandemic levels. But look, over the history, we have 150 years of oil history to look at. And whenever high prices come along, eventually the producers come out of the woodwork. Just the climate discussion is probably going to mean it takes a little bit longer before that happens.
Yeah, I got to tell you, I was filling up my truck yesterday, and $150 didn't do it, didn't get me completely full. I can see that Americans are concerned about that. What do you think about consumer behavior here in light of the horrible numbers we got out of UMich last week?
That is coming out of the woodwork, isn't it? I mean, everybody, has those conversations with their friends where they talk about whatever the car they couldn't buy or the Christmas gifts they can't get, or, oh my gosh, how much did it cost for me to fill up my car? And that is gonna weigh on sentiment. And it's not just about employment, because employment numbers are pretty good. If somebody wants a job, they can probably get one. So this is something that probably a lot of Americans haven't felt. If you're under the age of 45, this is kind of a new feeling for you. And yeah, it's gonna have an effect.
Ed, thanks so much for joining us. Ed Clissold there of Ned Davis Research. And I got to say, I've been looking for houses here. And yesterday I was up in Westchester at a place that someone bought in September and is now trying to flip for 20% more. I thought it's never going to go for that. The realtor called us last night and said they got 3 offers today and they want their highest by tomorrow. So
okay, and we shouldn't worry about the U.S. housing market then. Well,
it's
yeah,
unbelievable.
maybe. I'm still, to Ed's point, I'm still trying to find available a Christmas gift, a holiday gift that I promised to somebody for last holiday. Maybe
PS5.
I need to shop better.
Or Xbox.
I'm not doing very well, am I? Coming up on this program, is Ether's record run set for a pause? More on crypto next. This is Bloomberg.
And click on it, we make money. But now there's a big difference compared to other search engines. We use the money to plant trees all over the world where they are needed most.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Anna Edwards and Tom McKenzie in London. Let's get to crypto right now. Technical indicators suggest the rally in Ether, the second biggest cryptocurrency, is due a breather after a record-breaking run that topped Bitcoin, really blowing away what Bitcoin has done, at least year to date. Joanna Oshnier, Bloomberg News editor for Asia Crypto Coverage, joins us now from Singapore. And Joanna, we actually heard Ken Griffin last week say, and he's a crypto bear, that he thinks Ether is going to replace Bitcoin. Does it seem like it's run too far, too fast, though?
It has had some pretty impressive momentum, and some indicators do say it's due for a pause. My colleague Akshay Chinchalkar did the numbers on this, and if you look at the last run higher, it's about matched that in this run. And so he's saying it could be due for a pause here, but we're still above the 50-day moving average, even the 20-day moving average. I mean, it's been fairly relentless in moving higher, and it's down just a little bit off the record. It's about 47.33 right now.
And Joanna, for some people in some geographies and some asset classes, technicals are everything, and they guide thought on all kinds of asset classes. For cryptos, even more so, perhaps. So, I mean, how much of the crypto world relies on looking at these technical signals?
Yeah, good question, Anna. So it's a fair amount. I mean, there are a lot of people who just think it's going to go higher, right? They got into it, and over the past, 5-10 years, they have somewhat been proven right by that, of course, with a lot of volatility. So you can't just assume it's going to go up and stay up. There are, 80-90% drops as well. But the technicals do offer some sort of metric, because it's often hard to say what the fundamentals are of a cryptocurrency other than that people might want to get into the network and this sort of thing.
Yeah, so that's the technicals. What do we know about the holders of Ether? There's been a bit of research into the holders of Bitcoin suggesting that maybe 1 to 2% of holders have 99% of Bitcoin, so you have this whale effect. Are there similar dynamics at play for Ether, or is it different?
Somewhat. I mean, with most of the top cryptocurrencies, you will have some amount of concentration in it. And of course, Ether is so fundamentally different because Bitcoin is proposed as a store of value, really, just in terms of holding it and possibly as a payment network at some point. Ether is really more the value of the Ethereum network, and a lot of applications are built on it. So it's more of kind of an app store type thing. So they are very different in a lot of ways, and people knew what Bitcoin was before. This year, people have really started to figure out what Ether is.
Joanna, thank you very much. Bloomberg's Joanna Ostringer with the latest on the world of crypto. Coming up on this program next, coming up this week, in fact, the 4th annual Bloomberg New Economy Forum kicks off in Singapore. We'll be speaking with world leaders across a range of subjects, including finance, trade, climate, cities, and health. It all starts Wednesday on Bloomberg TV at Live Go on your terminal. That is also available. This is Bloomberg.
Its top spot as Asia's busiest airport in 2020 when passenger traffic slumped 88% from 2019. The lack of a domestic market and strict COVID rules have made for a slow recovery, and walking through the airport, the majority of F&B outlets and shops do remain closed. Here in the departure hall, long stretches still remain boarded up in areas where you would typically see throngs of passengers waiting to board their flights to destinations across the world. Only 2 lounges do remain open to travelers, one operated by the Plaza Premium Group and the other by Cathay Pacific, down from the 12 that are usually open here at the airport.
Unfortunately, when COVID had hit, we had closed a lot of our lounges and airport hospitality services. We're cautiously optimistic with the growth.
COVID certainly has forced a rethink of strategy to be nimble in the face of policy uncertainty during the pandemic era.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed. This is Bloomberg Surveillance Early Edition. I'm Tom McKenzie with Anna Edwards here in London and Matt Miller in New York. Airbus has booked a mega order worth more than $30 billion for 255 narrow-body A321 jets. At the Dubai Air Show, the deal will be shared with various carriers, including Wizz Air and Frontier Holdings. The CEO of Airbus spoke from Dubai with Bloomberg's Guy Johnson.
This is confirming that airlines start to look at the horizon, and we see the traffic rates going up. It's still a COVID-19 situation. We are not back to where we were in 2019, but I think we start to see the light at the end of the tunnel.
We've just seen the reopening of the North Atlantic. Are we going to see, Guillaume, the transition from this being a narrow-body recovery, which speaks to the order we've just been talking about, the Wizz order, to a wide-body recovery? When do we start to see big numbers for the bigger planes?
That's a very important question, and thank you for asking. We see the recovery as well on wide bodies and very long-distance flights, international flights, but not to the same extent. We continue to believe it will take more time to have the long-haul flights back to what it was in 2019. So we see the full recovery between 23 to 25, and it's going to be earlier for single-aisle business than for wide-body business. When exactly, we don't know. We think Asia will probably also take more time to fully reopen, so there's still a lot of work to be done.
Guillaume, let's talk a little bit about the freighter market. The freighter market has kept many airlines going during this crisis. I was talking to Shai Weiss about this other day from Virgin Atlantic. He certainly sees a big story going forward for freight. You do clearly as well. You've got the new 350F, the freighter. When are we going to start seeing big orders for that? Are we going to see a big order for that at the show? What are we thinking about the structural change in the market as a result of what freight is doing right now?
The freighter is a segment of commercial aviation that is not very big in terms of number of planes, but has played a huge role, has been a very big help in the pandemic for many operators. And we see a shift in the way goods are transported around the world. There's a lot of value that is carried by air, not necessarily the heavy goods, but the ones that have a high value and don't like to stay in inventories or being carried around the world. And we believe the cargo market will continue to expand. But there's also a structural change just ahead of us. There's a lot of old planes that need to be retired. Operators want to replace them by more fuel-efficient and carbon-neutral planes. And we see also the ICAO has put in place a regulation that will make those older planes not being able to be delivered 2028 onwards. So that's the moment where we come with A350 freighter. That's a great platform for a cargo plane. It's going to enter into service in 25, and we'll see orders coming soon. At the show, after the show, we'll see. But obviously, we are in discussions for orders on that plane.
The CEO of Airbus there, speaking with Guy Johnson from the Dubai Air Show, talking about the fact that he thinks it's going to take a little bit longer for Asia to reopen. Along those lines, we just got some heads out of Singapore right now that country, that city-state is going to open vaccinated travel lanes with India and Indonesia, which is really a key hub. Obviously, Singapore, huge hub for Asian travel. So that is good news for the industry. Tom Keene joins us, co-anchor of Bloomberg Surveillance, to preview what's ahead on his program. Tom, I just note that, even if it looks like things are opening up in some places, like Singapore now saying they'll open a travel lane with India, you've got record COVID cases in Germany. Austria locking down again for the unvaccinated. Another wave is coming on.
You really wonder where we're going to be in 30 days. I did notice, and of course, Matt, this is centered around Bloomberg's commitment to Davos and the World Economic Forum. You really wonder, are we going? That's in Switzerland and Austria and parts of Germany. I really noted that, Matt. I know you're way more up to speed than I am on that. You wonder what they'll do in Turkey. And today, with lira solidly based at 10 lira to the dollar, a long-term look, Matt, at a fractured country. A depreciation, a devaluation folds right into GDP. This goes back to JFK and the 1960 Turkish coup with the assassination of Menderes, the prime minister at the time, and the great Turkish expansion when the West learned how fragile Turkey was. And then the green arrow is the Erdogan boom of 2002, which was a moonshot. And they've just rolled over as signaled by that depreciation in the lira, and they are way behind.
Right, and interesting you bring this chart to our attention today, Tom, on a day where we're seeing Turkish banks actually having their best day in some 6 years. The Spanish bank BBVA giving a vote of confidence to the Turkish banking sector by buying out part of a business it doesn't already own. This is a sector that, just like the rest of the investment case around Turkey, has been weighed down to some extent by real macro challenges. But BBVA is seeing a way through that, it seems.
Well, BBVA, and folks, for the American audience waking up, this may be inside baseball, but the fact is the Turkish economy is extraordinary. It's Matt, it's the best road trip food I've ever had. Ever. It's like, think of Istanbul as like California on steroids in terms of fresh food, and BBVA wants to be part of that, and they can be part of that if they can come out, they can extract themselves from the tailspin they're in.
Yeah, the dining by the Bosphorus, Tom Keene. Absolutely,
kebab.
Co-anchor of Bloomberg Surveillance. Thank you very much indeed. That show coming up next. Now look at what else we are watching. I focus very much on this Xi Jinping, President Biden summit. It's happening later today. Look, we don't expect there are going to be major achievables that come out of this, but the political dynamics between and behind both of those presidents is interesting, of course, when you take into account the poll ratings that are plummeted for Biden, and then that strength of the support for Xi Jinping that he got at the plenum as he looks to secure a third presidential term. How that plays into the conversations between the two presidents.
Yeah, we'll be watching that very closely to see if anything comes out of this. You never know, right? Because it didn't look good for COP26 at the end of last week, and then they get a breakthrough agreement over the weekend. Tom has me thinking about flying into Istanbul for a doner kebab. They do them so much better there than they do in Berlin. But I'm not sure if they're going to want to let me in out of Germany now that the COVID infection rate has climbed to the highest it's been throughout the entire pandemic in Germany. We're talking about more than 300 infections, new infections every day per 100,000. I'm keeping my eye on that as I prepare to fly back home. Fortunately, I still have a couple weeks before I get back to Germany, but I'm a little bit concerned now. Maybe my wife will let me just stay through Christmas.
Well, I hope you get your travel plans sorted. Here in the UK, Matt, we're focused on the politics. There were 2 polls out over the weekend that put the leading Conservative Party actually behind the rival Labour Party. There's been a host of ethics scandals, essentially, plaguing the leadership of Boris Johnson. There is no election coming soon, though, not before 2024, unless it is called early. So more medium term or more short term, if you're focused on UK assets, you might want to watch the Bank of England's Bailey, Governor Bailey. He's testifying in front of Parliament today at a parliamentary committee. That comes, of course, before the December rate hike decision, which will be watched really closely by everybody in markets. More Bloomberg Surveillance is coming up straight ahead. We'll hear from former New York Fed President Bill Dudley and former Richmond Fed President Jeffrey Lacker. Lots to say about inflation, no doubt. This is Bloomberg.
Engine number one was able to do on the Exxon fight, it opened a lot of people's eyes to, I guess, the power that smaller investors can have. And I'm curious as to how other people can sort of look at what you did and use that is either a template or maybe just some sort of guide as to how they can sort of approach their relationships with other companies.
We founded the company in Engine number one on the idea that we take the data, not ratings and rankings of ESG of the past, but we actually take the environmental, the climate, the social, worker data, and we simply use it to look at the valuation of companies and look at it over a long period of time. And so if you think about it that way, you own these companies. Everybody that owns the company, whether you're a big institutional investor or you're a small retail investor, you own the company. You have a voice, you have a vote every year.
Yeah.
And so our approach is to use the vote and engage with these companies over time.
But that's always been the case. I mean, at least in theory.
You finally got your taste of MIT, so why did you decide to leave MIT and come in and run the SEC?
One, when a president asks you to do something, it's really hard to say no. But it's also just an incredible privilege and an honor to serve.
Will we get to herd immunity? Or let me ask it a different way. Have we given up on herd immunity as a practical matter?
You will know when you get to that point, when the cases are so low, they're barely detectable. That's what herd immunity means. We don't know what that percentage is, David.
This is a new Fed, it's a new reaction function, and they are willing to let things run hot.
There's no good models of inflation expectations.
The cycle is starting with more inflation and flatter yield curves.
I think the Fed's job here is to be the steady hand and keep their eye on that medium term.
Everything is transitory in a long enough time frame.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Getting your training week started from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Your equity market up 11 on the S&P, advancing 0.25% after a very small week of losses last week on the S&P 500. TK, we're looking down to D.C. It's all about the president's next move.
It is. I mean, that's going to be the theme of the week. I agree with you, John, but it's also the theme of getting into next year. John, what I love is the lineup of guests this morning to brief us not only on Powell and Brainerd, but also on the markets is just first-rate. John, in moments, we're going to go in search of Dow Jones 38,904.47.
Where did you find a target price on a Dow?
We interpolated the extrapolate of the Standard & Poor's 500.
I can find you a price target on the S&P 500. It's 4,400 from Morgan Stanley on the S&P year-end next year. They are underweight the United States. They are overweight the likes of Europe and Japan.
And others go against that. I mean, there's a lot of divergence of opinion in here, John, including on the next Fed chair.
Massively, not just on the Fed chair, but also on the next Fed rate hike. When will it come? Lisa, Morgan Stanley say Q1 2023. They think inflation next year starts to moderate. As it moderates, they can wait.
That's a fascinating call. I was struck by the idea that the Federal Reserve has the ability to push back against the political shift, trying to fight inflation. How do they do that and wait long enough to raise rates? How much does that depend on the Morgan Stanley call that we're going to see those inflationary pressures roll off in the very near term?
We've got to find out who runs the Fed as well. And we're still reading the tea leaves. Here we are in the middle of November, reading tea leaves. A Wall Street Journal piece out 30 minutes ago suggesting that the interview with Governor Brainerd went better than expected, went on for longer than expected. And Lisa, that's basically all we've got right now. Just reading the tea leaves and some reports about how some interviews went a couple of weeks ago.
We don't even understand what the parameters are. What does the Biden administration want? A more dovish Fed? Is that really what they want with inflation going high? Is it really to appeal to progressives, or is this just about the employment market? We don't even know.
We have no idea. Watch this space, and hopefully maybe at some point this week, perhaps, possibly, later this week, we might find something out. Maybe. Equity futures up 10 on the S&P, advancing 0.2%. To kick things off this Monday morning, good morning to you all. We advance on the S&P 500. In the bond market, yields come in just about a basis point to 154.94. Your main event this week, US retail sales on the data front. Lisa's going to run you through that. Tom Keene, euro dollar 114.49, and crude, look out below, a break of 80, 79.92. Senator Schumer over the weekend, Tom, calling for an SPR release once again.
Yeah, I'm going to play away from the SPR. There's been a lot of study of that. I'm not sure how big that is, other than it makes a big media splash as well, John. I would say it's stasis on the screen for Monday, and what I'd really look at is retail sales. I believe that's tomorrow, John. I don't think that's a small issue.
Lisa, that is the big data point of the week ahead.
How much dynamism is there in the consumer spending area, especially if you do see that wages are lagging behind some of the consumer price increases that we have been seeing? Today, we're not getting a lot of economic data. The big main point is 8:30 a.m. We get U.S. November Empire manufacturing. The idea here is the first read on this month's manufacturing amid some of the supply chain disruptions, amid the labor market shortages. That will be in focus. And the expectation is for there to be an ongoing increase in manufacturing. So still some momentum there. Today on this show, we are so lucky to have ex-New York Fed President Bill Dudley. He will be joining us about 7:45 Eastern. And then former Richmond Fed President Jeff Lacker joining us here around 8:30 a.m. The focus very much about who will be the next Fed chair. I want to bring you this quote from Janet Yellen on CBS's Face the Nation over the weekend. Basically, she had been reported to be supporting Fed Chair Powell earlier. This time around, when she was asked about it, she pushed back, said that she does think that Jerome Powell has done a good job of running the Fed, but what's important is that President Biden choose someone who's experienced and credible, and there are a range of candidates. Again, opening up the field to the two candidates just as wide as it always has been. And later today, not only do we hear from President Biden, who's expected to sign the bipartisan infrastructure bill, but President Biden and Xi Jinping of China are expected to have a virtual summit to talk about trade, to talk about climate. This really is notable as being their first summit. They have met twice before on the phone, but this evidently is being heralded as something more, John.
That line, Lisa, and thanks for bringing it up. I saw the same thing. Tom Keene, a range of candidates. The middle of November, and we're talking about a range of candidates. We've got to make a decision.
It's a political decision, as Nick Timmerow says in the Journal today. I know Scott Landman and our team is forwarding the story as well. John, this is about politics or economics, and I'm sorry, it's always about politics.
When Gary Cohn, Tom, ran the National Economic Council for the Trump administration, there were some really credible Fed picks that came through. We had some decent clarity on what the interview process looked like, and then when we had a change and Gary Cohn left, when he was replaced, Tom, it was like the next administration, the former administration rather, took the process less seriously, started to come up with some random candidates. And this time around, I'm surprised, I'm really surprised that the current administration and the previous administration haven't addressed this, Tom, with a little bit more urgency. This is a really important institution that you have the opportunity to do what you will.
John, you know the distance.
And I'm surprised that it gets overlooked.
Well, you know, John, you know the distance from the city over to the Bank of England. I don't know that distance, but I do know the distance from Wall Street and Goldman Sachs up to the J.P. Morgan Museum and Mansion on Madison Avenue at, I believe, 34th. And the answer is Gary Cohn knows why we have a Fed and why it's important for the financial system.
It seems to be lost at the moment, Lisa. And again, it's not just a criticism of what's happening here and now down in Washington. I saw it before in the previous administration as well. Left some open seats, tried to fill them with some names that were never going to get those seats, and just dragging their feet this time around for an institution that, again, is really powerful. And you have the opportunity to do something really significant with.
And is at a moment that is incredibly fragile, where you do have bifurcated potential outcomes with such an uncertain outlook with inflation.
We'll catch up with Anne-Marie down in Washington a little bit more on this in around about 10 minutes or so. Joining us now, Lori Calvasina, head of U.S. equity strategy at RBC Capital Markets. Lori, at the close on Friday, 46.82, year-end 2022, you're at 50-50. Walk us through the path to 50-50 year-end 22.
So thanks, John. It's great to be with you guys as always. Look, we wanted to really refocus the conversation as opposed to just kind of thinking about where we're going to trade over the next 6 weeks, where are we going to trade over the next 12 months. And so we just went back to our models. Basically, all of the economic backtests and models point us to about 5,100 or higher. Our valuation models, several of which are looking at stocks versus bonds, are porting us to a number of about 50-50. And I think what we're really seeing in the data are two things. Is one, even though economic growth is expected to cool off next year and we do have some hurdles to get through, frankly, on supply chains and inflation. If we're right about where the economy is going to end up next year, if it's about a 4% type number, which is what the economics community is anticipating right now, we should be getting to somewhere around 5,100 on the S&P. That would be fair value. And all of our valuation work, if you look at stocks versus bonds in particular, stocks are still the only game in town. And I think that gets lost in this equity market discussion at some point in time. Yes, we have extended valuations, but stocks at the end of the day are an inflation hedge. And when we look at our models that evaluate stocks versus bonds, we're still seeing a case for 8% type returns next year.
Yeah. Lori, just a beautiful brief there. I noticed, Lori, the string from General Electric to J&J, and this morning the idea that Royal Dutch Shell will finally move from the Netherlands back over to the United Kingdom. And these are corporations that adapt. They're going to adapt based on what you just said to 7, 8, even 9% nominal GDP. If you forget about the mathiness of it, you extrapolate, the interpolate, whatever, a phrase from my childhood. How do you base your call? Is it based simply on nominal GDP?
We look at nominal GDP, we look at real GDP. Again, we look at stocks relative to bonds. We look at a plain old-fashioned PE multiple and make an assessment about next year's earnings. And I'll tell you, Tom, the earnings discussion is fascinating because there was so much angst on this last reporting season about whether or not companies were going to be able to manage through supply chain pressures and inflation pressures. And there was a lot of, complaining. And I'm not saying it's unjustifiable. But if you look at the inflation discussion, it was pretty negative. We had a lot of companies talking about how, their inflation outlooks had gone up next year, that they were caught off guard by the inflation that they saw perk up in 3Q. Supply chain pressures have been real. They have been intense. But at the same time, companies have demonstrated a remarkable ability to structurally suck out costs from their systems. They have been applauding their supply chain teams, their logistic teams. They've been getting inventories on the shelves. They've been meeting the demand that they can, and they are managing through in a remarkable way. And I'm really hard-pressed to understand why that won't continue next year on the strength that we've already seen.
Lori, how much is the question mark here fiscal spending, the idea that we're going to get a fiscal drag next year, and that could potentially affect how much consumers are willing to absorb these costs? I mean, I'm struck by the fact that nearly 2 out of 3 of the biggest U.S. companies actually reported substantially fatter profit margins this year than back in 2019.
Well, look, I think it's a question on consumers and corporates. And we know that the corporates are passing along price increases. And what we're seeing so far is that there is not any negative feedback on underlying appetite, as I like to call it. There have been some issues with meeting demand technically here and there, not for everybody, but a few. But underneath the surface, consumers still have the cash to go out and spend and still have the appetite to go out and spend, even though, frankly, they've been feeling lousy for the last couple of months. And I think part of that is a testament to the fact that we have this unbelievably strong labor market, and we are seeing wage gain increases. So at the end of the day, the appetite is still there. And, I look at some of the forecasts around the street that are calling for negative numbers next year or severe pullback, and I just simply don't see the case for a growth scare. I don't see the case for the idea that we're going to be flirting with recession, which is typically what really pushes us down into negative territory in equities.
Lori, great to catch up, as always. Good to see you. To kick off a trading week with Lori Cavacina of RBC Capital Markets. Speaking of robust growth, the outlook for Morgan Stanley, Tom, on the equity market is just one part of the story. For the economy, if you look at the piece from Ellen Zentner released over the weekend, 4.9% real GDP growth in 2022. 4.9%, pushing 5%, Tom.
Yeah,
that's robust growth.
Okay, but you point out the key distinction, John. Equivalency, we've got a Zentner GDP call, very much like the Tom Porcelli GDP call at RBC, plus or minus points, and yet you get a different equity view out of that.
3 handle on PCE as part of the outlook for next year.
That was CFA level 5, John.
Thank you, Tom. Appreciate that.
Studying over the weekend.
I've been studying CFA level 4 a lot since I started with you.
I know, yeah.
You crushed it. And some hard drinks at the weekend. Yes. Lisa, almost a 5 handle on that outlook for GDP. It's impressive.
It is.
No, I don't need, no Prosecco.
No? Just straight vodka this morning.
No, we had mimosas. We did mimosas and pineapple juice over the weekend.
Futures up 0.2% on the S&P from a beautiful New York City this morning. Good morning to you all. Beautiful. Kicking off a brand new trading week. This is Bloomberg Surveillance.
With the First Word News, I'm Leanne Gerrans.
President Joe Biden and China's Xi Jinping have plenty to discuss during their first virtual summit. Still, the expectations for a major breakthrough are low. The summit is set for tonight, Washington time. Relations between the two countries are tense. There are disputes over Taiwan, human rights, and the origin of the coronavirus. Now, the European Union has approved new sanction powers related to Belarus over the flow of migrants towards the bloc's eastern border. The president of Belarus, Alexander Lukashenko, is using thousands of migrants from Iraq, Syria, and other countries in what the EU calls a hybrid attack. He has also threatened to block the flow of natural gas from Russia to the EU. Senate Majority Leader Chuck Schumer wants President Biden to tap the Strategic Petroleum Reserve to help lower gasoline prices. Schumer says that consumers need immediate relief. The president has hinted he may take action on fuel costs. Polls indicate many Americans blame the president for failing to contain inflation. A new study has found that the Pfizer and BioNTech COVID vaccine resulted in the strongest immune response. Researchers looked at 4 vaccines. They found that people getting Sinopharm shot may be particularly vulnerable to a breakthrough coronavirus infection. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Leanne Gerrans. This is Bloomberg.
Are talking about Bloomberg surveillance.
There's some guy out on Twitter who says I look like I'm 101.
I know, I noticed that.
Do you think I need a lift? Is it time
What
that
did he say about me? What did that particular gentleman say about... Let's have a look. One of them is near 101 years of age.
Which one would that be?
The other has an ego in the orbit of Mars. Who's that?
I have no idea.
Mrs. Lisa, the only chance to productive conversation. It's a fairly accurate summary of this show, isn't it, Tom?
The eyes, or should I do the whole thing?
The energy crisis, there's a lack of drivers. Is there anything that you need to ask authorities to do better, or that your clients want the UK to do better?
I think we're at a moment in time where we're coming out of the pandemic and there are a handful of things going on. I think all over the world there are labor issues that are really a reflection of this transition out of the pandemic. There are supply chain issues. Some of this stuff is transitory. There are some secular trends that we have to watch closely. But I think we're adjusting and dealing with it as anybody else is. And I think leaders here are thinking about it the same way leaders are around the world.
When you look at the UK and, of course, some of these green investments that the UK and the City of London particularly has been really trying to pitch, you've been extremely involved in carbon offsetting. Can London really spearhead that movement?
Well, I think it's important that governments around the world partner with the private sector to try to get capital directed toward innovation in a way that we can accelerate the climate transition. And I want to emphasize it's clearly a transition.
I was just finishing what you were saying, Tom.
Thank
November
you.
3rd
You did
when the
you're
decision is, just in case people got confused, I will. Just one more story, Tom.
Yeah, thank God for that.
We're at 137 right now.
Wrap it
It's
up.
a weakness. Is this where they play the music and the Academy Awards? Is this it? Do I thank my mum again? Are you in charge of this?
Is she the only one?
Kill the music. You know who's in charge here.
All of these things go right at lowering costs for American families, and this bill is fully paid for. It's not going to add to inflationary pressures, quite the opposite, because we're going to pay for everything in this bill by raising taxes on big companies, large corporations, and the highest income Americans.
The administration out in force over the weekend. Brian Deese there, the director of the National Economic Council on CNN. From New York City this morning, good morning. Tom Keene, Lisa Abramovitz and Jonathan Ferro. Your equity market positive, up 12 on the S&P, advancing 0.25%. Yields in a single basis point, 155.11 on 10s. I'm with Tom. Your big data point of the week is U.S. retail sales. Look out below for crude, 79.87. We're negative there, 1.14%. The majority leader, Senator Schumer, would like an SPR release. Brian Deese says it's on the table, but what got everyone's attention over the weekend, Tom, was this poll from the Washington Post.
Yeah.
Washington Post ABC poll. A couple of things that pop out for me, Tom. Here's one. 70% rate the economy negatively, including 38% who say it is in poor condition. About half of Americans overall and political independents blame Biden for fast rising inflation. That's the blame game for the president, Tom.
Yeah.
Whether you think he's responsible or not, that's the poll.
There's a warehouse out in Bethesda that has whip inflation now buttons, John. They sold quickly in the Ford administration as well. We've got a 1-hour conversation now with Anne-Marie Horton. We'll squeeze it down to a matter of minutes. Our Bloomberg Washington correspondent. Anne-Marie, the sun is rising in Washington. It was a sporting weekend. Forget about the summit. Forget about this. What does the president do to right the ship?
Well, you're right. It was a sporting weekend. You can tell by who they put on the Sunday shows, but what they care about. It was Treasury Secretary Janet Yellen speaking to Face the Nation. Of course, that was led on what's going on in inflation, as well as economic advisor Brian Deese. They are clearly worried about inflation. Today, the president will be signing that hard infrastructure agreement into law. He waited about a week or so because he wanted to make sure he can have the full show and dance with leaders on the right and the left joining him in this signing. And potentially when he does this, this is a way they could try to build up those really terrible poll numbers we saw over the weekend.
The vector's moving in the wrong direction. He is going to be compared to the former president, Mr. Trump, shortly. How does he and Ron Klain turn that around, and particularly by the symbolism of Powell v. Brainerd?
Okay, well, for one thing I would say is that this poll also was done after the bipartisan infrastructure agreement was voted on. So the administration likely thought that that was going to give them a boost. It hasn't yet. Potentially today's signing, potentially the president going on the road this week. He's going to a GM plant to look at EVs, a number of other places to talk about that infrastructure. That could help him. When it comes to Powell versus Governor Brainerd and how the Fed is going to look, we're still waiting. We don't know yet. There was some recent reporting this morning coming from the Wall Street Journal, which talked a little bit about the nuances of those meetings. They both had an hour with the president. It looks like Governor Brainerd went over a little bit slightly on that allotted time. But again, we heard from Treasury Secretary Yellen over the weekend, once again saying she thought Powell has done a good job over the pandemic. It was a hard ship to steer. But again, she also noted that there are a number of good candidates on the table. Before Thanksgiving is what we are waiting on an answer, but we just don't know yet.
Anne-Marie, when it comes to inflation, what message is sticking from the Democrats as to why it's okay?
Well, they don't think it's okay. You heard from Senator Schumer over the weekend telling the administration, tap the SPR because I need these gasoline prices to go softer around the country and especially around places like in New York. I was in New York City over the weekend and there are higher gasoline prices. These are things that bother the electorate. And what the Democrats are really starting to realize, when you have Senator Schumer coming out telling the White House publicly you need to do more, they are clearly realizing that their messaging is over the past few weeks and really about the sausage making in D.C., that is not what the electorate wants to hear.
And Anne-Marie, I mean, that's the reason why I ask is because you heard 3 different messages from 3 different people. Janet Yellen saying once we get rid of COVID, the inflationary pressures will abate. From President Biden saying that the bipartisan infrastructure plan will actually lead to more support for supply chains and lower prices. Chuck Schumer coming out and saying release more oil from the SPR. All of these are different inputs, right? I mean, these are all sort of different messages, and none of them are sticking. I am wondering how, just to dovetail the 2 conversations to a Fed chair, what this administration would want. Would they want a dovish Fed, or would they want a more hawkish Fed based on the inflationary concerns?
I don't know what the administration wants. We don't even know all of the candidates they are interviewing for. If they don't choose Governor Chair Powell to remain, that's 4 spots. We know that off of our reporting over the weekend that Mary Daley was potentially from the San Francisco, was asked as a pick, and she said no as on the governor spot. So we don't know which direction they are going in, but the inflation picture right now, which Goldman Sachs says is going to get worse over the winter before it abates, that potentially is going to put a little bit more pressure on them leaning towards anyone who's a little bit more hawkish on inflation. The problem is, how do you know who's hawkish on inflation? Powell and Governor Brainard have been in these spots when inflation over the past few years has hovered around 1.2 to 1.5%. No policymaker right now has really had to deal with this. So it's very challenging.
Anne-Marie, thank you. AMH down in D.C. I love that story about President Daley of the San Francisco Fed, Lisa. Do you know how much a Fed governor gets paid? About $180,000 a year. Yeah. Do you know how much a Fed president of San Francisco might get? Perhaps something north of $400,000. So if you're asking someone to leave their position as the Fed president of San Francisco, you're asking them to take a pretty severe pay cut to take the seat on the FOMC. And I think a lot of people forget that the chair of the Federal Reserve gets about $200K. $200K compared to, say, do you know what the president of the S&P gets, Tom?
Well, no,
almost 800,000. 800,000 compared to the 200K that Chairman Powell gets. Granted, afterwards you get to do some speeches, TK, that bring in some real money. But a seat on the board as a governor to give up a presidency, you're sacrificing some cash.
Oh, I'm going to get in trouble here, John.
Get in trouble. Go for it.
You're killing me on a Monday.
Just take another shot.
It is an absolute disgrace. There's no other way to put it. They are slaves to the speaking racket. I've lived it. They're slaves to the speaking racket, and it's not good. It's gone back for decades and decades and decades. They retire poor.
Are you suggesting, Tom, that they should get paid more on the Federal Reserve and perhaps have more rules around what they can do afterwards?
No, they should not have rules afterwards, but they should be compensated so they can live like professional people. And I'm sorry, it's chump change in Washington, D.C.
There is a revolving door debate that you're highlighting right now. The idea that if you go into government in some of these official positions, you can come out and make a huge amount of money. And that is the reason why the government can afford to pay such low prices, such low wages to the people who come into these key positions. But John, I would just argue that we have to have a reckoning of what we want from our public officials and then be okay paying more if we want to restrict them in other ways.
It was fun just to stir the pot there with Tom. I'm pleased you took a bite out of that, Tom. Futures up 11 on the S&P 500. Tell us what you really think next time.
Troublemaker.
Just, it's early on, Monday morning. Not much to talk about. Let's talk about pay down in Washington. Yields
this is payback.
About a basis point.
Hey,
155.45.
I don't.
He's grumpy this morning.
Who's the senior sibling here?
Tom Keene, Lisa Abramowitz, and Jonathan Ferro for our audience worldwide on radio, on TV. This is Bloomberg Surveillance.
such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
It is really still day one for AWS and for our customers. It is still so early in this business.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Live from New York City for our audience worldwide on TV and on radio this Monday morning. Good morning. Here's the price action. Positive 10 on the S&P, up 0.2%. On the NASDAQ, up about 0.2%, also advancing 28 points. Starting to get a feel for the year ahead now, year end next year. At the top end, the likes of, say, Lori Calvasina at RBC at 50.50. At the low end, Morgan Stanley at 4,400 on the S&P 500. That's quite a divide. The view at Morgan Stanley, though, is not actually that bad on the economy. Switch up the board and get to the bond market. They're looking for something close to 5% on real GDP next year. They're looking for something closer to 3% on PCE. So inflation comes in, growth comes in, but growth is still robust, and they expect real yields to adjust. And because of that adjustment in real yields, that's why they're a little bit more bearish on, say, the US compared to, say, Europe. In the bond market right now, 155.45 on 10s. Big move last week. Yields unchanged this morning on 30s too, up by about a half a basis point to 193.63. No drama here. Could you get some drama in the commodity market? Switch up the board and finish there on WTI. WTI this morning, 79.79, down by 1.25%. I sound like one of those auctioneers selling cattle. Anyway, I digress. Senator Schumer, majority leader in the United States, suggesting that he would like to see an SPR release. Brian Deese, the director of the National Economic Council, Tom, saying it is on the table. We wait, but that's the risk right now, the downside risk for crude. Do they make a move down in Washington? 79.78 on WTI.
On a demand dynamic, I don't hear anybody walking away from $100 a barrel. We'll have to see how that unfolds as we get through 2021. It is 2021, and in 1991, an economist showed up at Morgan Stanley from Morgan Guarantee, and his name was Stephen Roach. He codified the Morgan Stanley method, which is we argue like cats and dogs, and then we argue about it out in public. And I've always respected that Morgan Stanley takes a different tact on intellectual component in research. That's going on right now at Morgan Stanley. A cautious view, as John mentioned, on the equity market. From Mr. Wilson, Michael Cushman joins us, CIO for Global Fixed Income at Morgan Stanley, going, Tom, don't ask me about the stock market. Michael, good morning as well. Dovetail, not the argument of bull or bear in the stock market, but dovetail how your world folds into a bull or bear call of the stock market.
Well, I think we really think about it from a top-down bond market perspective of where interest rates are going. That all comes down to the components of rates in terms of the path of short-term rates. What's the Fed going to do in response to what's going on in the economy with growth and inflation and global developments and financial asset price performance, as well as inflation and growth. And what we've seen this year is an unbelievable opposite moves in inflation expectations and real yields. So as inflation expectations have ratcheted up over the course of the year, real yields have fallen back to recent lows, offsetting the impact on nominal yields. The 10-year U.S. Treasury note has kind of been stuck around the 1.5% on and off for most of the year since the spring, and that looks like it's going to change. There is a gridlock between the bulls and the bears on, is inflation going to fall rapidly enough, or is it going to not fall rapidly enough? What real yields are going to do, and that's going to be based on what the Fed's going to do.
And the separation here, Michael, is the nominal from the real. The nominal is the nominal yield, folks, or the nominal GDP. Take away that inflation dynamic. Which is your greater mystery here? Actual nominal animal spirit, or is it the inflation changes?
Well, inflation changes don't seem unreasonable, and we've had surprise on inflation all year long. If you look at where market consensus was on inflation at the beginning of the year, every single quarter they missed on the low side. It turns out higher than expected, quarter after quarter, even month after month after month. And going into the end of the year, no one had predicted inflation would be where it is today. it is substantially higher. On the other hand, real yields have but that's been expected. Higher inflation was expected, just not as high as it is. On the other hand, to see real yields retesting or making new lows from where we were in the pandemic seems out of line with the economic future.
Michael, one key theme of this inflation debate is just how married people are to their views on what will happen with inflation. It doesn't seem to me that the incoming data is changing anybody's minds. If I look at the people at the Federal Reserve who thought this would be temporary, they still think this would be temporary. Tom and I asked the Vice Chair 6 months ago, what would it take, what would be the tell that would tell you that you were wrong? He said the turn of the year. Here we are, staring down the barrel of the end of the year with a 6 handle on CPI, and yet I still don't hear them changing their mind. Michael, what would make them change their mind?
It's going to have two things. There's two critical ingredients. One is the labor market. The labor market is behaving much differently than expected. The participation rate has not improved anywhere nearly as much as expected, again, earlier in the year. So wages are not rising rapidly, but they are the lack of workers basically in the economy, a lack of labor force participation is slowing down the ability of the supply side, particularly in the service sector, to recover. In addition to that, we see on the supply side in terms of goods, the supply bottlenecks we see around the world is taking extra long to resolve, if being resolved at all. We're seeing again in the fourth quarter in the recent inflation data of used car prices going up, new car prices going up. These things were supposed to ameliorate into the year end and get better and better such that we're back to normal next year. We're seeing, I think, likely normalization next year. We should see trend improvement in things, but from such a distorted level that we may not be happy still where we are 6 months from now.
Michael, what would raising rates do to fight these inflationary pressures?
Not a whole lot. If it worries investors and participants about where the long-term growth is, we seem to be a gridlock again between if rates go up, that reduces growth in the future. So you see long-term bond yields come down, real yields come down further, mortgage rates don't move, housing market stays really strong. Consumer durables stay strong, but financing rates are low and nothing much happens. So how do you get rates up across the yield curve to slow things down? But then the question is, do you really want to see demand fall when you're seeing a weaker supply side going forward?
Is it the same argument, Michael, when it comes to the bond purchases? In other words, do you think that the Fed could potentially bring down some of the inflationary pressures if they just ended them early next year ahead of schedule?
I think you can make the case now ex post, and of course hindsight's 2020, that given that how things have actually evolved in 2021, Fed could easily have ended QE earlier this year and finished it by now, right now. So I even think that I would feel behind the curve a bit now. So I think they're going to get rid of QE at a reasonably paced pace without upsetting rate expectations, unless they really see the need to push short rates higher. But again, people are consumer confidence is at low levels, but where higher rates, higher mortgage rates help that consumer confidence right now. Is that really helpful right now? In other words, inflation is something that Janet Yellen has pointed out is related to COVID, is related to the supply side. The Fed is a bit in a tough spot and will not really work in the short term, helping reduce inflationary pressure simply by raising rates today. But yes, ending QE seems to be a no-brainer in that sense.
Michael, when you speak to people internally and externally, do you find the conversation right now is pretty binary? There are people out there who either think rates need to stay at zero or we're going to recession. There is this belief that if we start to move, we're only going in one direction, and that's cycle over. What do you make of that?
I think it's all about confidence or about the level of uncertainty there is in the world. There is the view that some people had inflation as an underlying problem. The COVID crisis has created supply side issues which are not going away. This is the people think inflation is going up, that if the supply side is quasi-permanently damaged so that the world or the U.S. economy will produce less goods in the future at a trend growth rate than it did in the past, aggregate demand has to be brought in line with that reduced production capabilities. And that means we need tighter policy, but otherwise inflation is going to be too high. On the other hand, is just a temporary phenomenon, that this will resolve itself, just give it time. And let's not be precipitous about making it worse, making demand worse for goods and services now.
Michael, in our heads, are we shifting down, given what the Gloom Crew says, or do we, on the x-axis, move along to get back to stability?
I'm a relative optimist that things are going to slowly
That's why
get
I asked
better.
the question. I got to get out. I've been talking to Farrell all morning. I got to get optimistic here. Help me out.
I do think the supply side issues will likely work themselves out. The world economy, and these crises come about because we've had an unusual, perfect storm of multiple things happening simultaneously. No one would have predicted all these things happening at the same time. No one predicted the U.S. labor market would be behaving the way it is now. It just takes time, and this is where the optimist, the Fed is. And again, we need time to sort through changes. And we know the Fed likes to move in large amounts of tightening. Why raise rates 25, 50 basis points? So don't move until you really think you got to move 100 basis points. Normalize, get back to what you think is normal, 2% Fed funds rate, something like that. So let's not move 50 basis points and realize that was a mistake.
I've got no idea what normal is anymore, Michael.